Thank you for joining us today for our Uranium Conference 5.0. 2022 has been a news-filled year, to say the least, for both the nuclear and the uranium sectors. Beginning with civil unrest in Kazakhstan, the invasion of Ukraine, energy sanctions placed on Russia, UK's big push into nuclear, the restart of idled nuclear plants in Japan, and the impending energy crisis in Europe all bode well for the price of uranium. But with this positive backdrop, why isn't the price of uranium significantly higher? To answer this question, we've assembled some of the smartest people in the nuclear and uranium sectors. Our first speaker is conference sponsor John Ciampaglia of Sprott Inc., followed by David Cates of Denison Mines, Sama Bilbao of the World Nuclear Association, Tim Gabruch of ISO Energy, Justin Huhn of Uranium Insider, Leigh Curyer of NexGen Energy, Jander of WMC Energy, and we conclude with Askar Batyrbayev of Kazatomprom. We also want to give a shout out to John Quiggs, who's also a valuable source of information on Twitter, and I encourage you to check out his Twitter account at Quiggs99. Now there's one more thing I need you to do. Subscribe to our channel, Bloor Street Capital, give us a like and leave a comment. I hope you enjoyed the conference. Hi, John. Thank you very much for joining us today. How are things in Toronto?
Oh, hey, Jimmy. Thanks for having me. Things are good in Toronto. Been busy recently, traveling around doing some meetings with institutional investors in person in New York, and also remotely with investors in Asia a couple weeks ago.
Oh, that's good. Well, I'm going to pick your brain about that in a little bit later. But before we do that, many of our viewers are familiar with the Sprott products. But if someone's not familiar with Sprott and their various portfolio products, which are specifically focused on uranium, given that's what our conference is today, maybe you can just tell us briefly what are the products that an investor can invest in, which are focused on uranium.
Sure. Well, Sprott Asset Management, I'm the CEO of that entity, manages two exchange-listed vehicles that are invested directly in the uranium sector. The largest of the two is the Sprott Physical Uranium Trust, and it holds almost all of its assets in physical U3O8 or yellow cake. And that vehicle is almost $3 billion in size. And then more recently, we launched the Sprott Uranium Miners ETF, which trades on the New York Stock Exchange under the ticker URNM. And that is a vehicle that is designed to give you broad exposure to the uranium sector across producers, development companies, exploration companies, as well as some vehicles that hold physical uranium, including the Sprott Physical Uranium Trust.
So the Sprott Physical Uranium Trust has some very unique features, and maybe you can just touch on them, beginning with the ATM. And how does this work?
Sure. Well, obviously, investors can't go out and buy their own physical uranium and store it unless you're a very large institution. So the vehicle is a very convenient way for investors to play this sector. As I said, we own only physical uranium in the trust. And we use a mechanism called an at-the-market capital raising tool that allows us to raise capital when the fund is trading at a premium to its NAV, that's its net asset value. We're able to issue new units into the marketplace to meet demand. And so it's a closed-end fund, which means at times it'll be at a premium to its NAV. There will be other times where it'll be at a discount to NAV, which means you can essentially buy uranium below the spot price, and that's obviously provides investors with an opportunity to get positioned in the sector at a favorable point in time.
And what is the maximum cash position that the fund can hold, and how long can you hold this cash for before you have to deploy it?
I mean, we can hold upwards of 10% in cash, and I don't think we've been anywhere near that. And I think as the fund has grown over the last year and a bit, we've obviously grown it from 600 million to just shy of 3 billion. So it gives us a lot more latitude in terms of building up a cash position. But right now, I think we are about 99.5% invested. We've put almost all of our cash to work. We hold back a little bit to pay operating expenses, and the reason why we've reduced our cash position of late is that we think the market is really constructive right now, and we wanted to get as many pounds in the trust as possible.
And on that point, when you took over the fund in July of 2021, I believe it had 18 million pounds. How many pounds does it have now?
Yeah, we have just a little over 58 million pounds. So we've been incredibly busy over the last 12 months, adding more pounds to the trust. One industry commentator commented recently that they thought that the vehicle accounted for about 40% of the trading activity in the spot market in the past 12 months, and I think that's probably a fair reflection. I think the more important point is with respect to the pounds we purchased is related to the secondary supply that's available. And one of the things that's been feeding the supply deficit that we've had the last few years in the uranium market has been secondary supply. And I think it's fair to say that with 40 million pounds coming out of the market the last 12 months, the market has become a lot more tight. It is becoming more difficult to source pounds. And I think that's important because it's a key, I think, how it influences the spot market, week to week.
And John, who actually accumulates the uranium for the spot product?
Yeah, so we have a technical advisor called WMC Energy, and they basically help us with the procurement of uranium. And they basically go through a drill every day where they're talking to industry people about what kind of material may be available, what kind of pricing, what kind of delivery windows. And every day is a little different. Some days it's hard to find offers or firm offers. Other days people are knocking on your door saying, "Hey, I got material to sell you. Are you interested?" And they've been instrumental in terms of helping us accumulate that sheer number of pounds. As I mentioned, 40 odd million pounds the last year. Now, to put that into context, as people might not understand, okay, what does that mean, 40 million pounds? It sounds like a lot, but to put it into more tangible, I think, terms, last year, if you added up all the uranium mines in the world, they extracted about 130 million pounds out of the ground. So it's a pretty significant percentage of annual production.
And as a reminder to our viewers, we will be having a discussion with Per Jander of WMC Energy later on in the conference. John, the other product you mentioned was the Sprott Uranium Miners Fund. Maybe you can just touch on that. How many names are in that fund, and what would be the top 3 holdings?
Yeah, sure. So with our interactions with investors around the world, we really find investors are interested in the physical commodity to play what they believe will be higher pricing. And if there's higher pricing, then the related miners often benefit from that. So investors like to have some proportion in physical and some proportion in the actual mining companies, because the mining companies provide a lot of operating leverage. They provide a lot of optionality as they discover new deposits and define them. And then obviously as the producers are bringing back deposits or their mines back online, that's providing tremendous cash flow to these companies after having mines on care and maintenance for the last few years. So if you look at the holdings of that particular index that we follow, there's about 35 different holdings. The top holdings would be the 2 largest producers in the world, and those would be Kazatomprom, which is the world's largest from Kazakhstan, and Cameco, our own Canadian company, that is also one of the top producers in the world. And then the third holding in the fund is actually the Sprott Physical Uranium Trust. So you get a little bit of exposure to the commodity itself by holding the ETF. And then as you move down, you get the next generation of mines to come, we believe, and those would be things like NexGen and Denison mines. And these are companies that are further along the development curve, not quite at building a new mine, but clearly further along the process in terms of delineating the assets and also securing environmental permits and everything else that you need to actually get in place before you can actually put a shovel in the ground and start building a new mine. And then there are a number of smaller exploration companies, and these are companies that are still, drilling, trying to find deposits or define what they've started to discover.
I want to move on now and just touch on the spot market. The spot price started the year at 42. It's got as high as 63, I believe, in March and April, just on the back of, I guess, the threat of sanctions on Russia and with their enrichment and conversion products. But in the last few months, we've been kind of range bound, I guess you could say, in the high 40s, low 50s. Maybe you can just give us some commentary on your thoughts on the market and what you and your team have seen in the last few months.
Yeah, sure. Well, as you mentioned, it's been a little bit of a roller coaster year, and we started off at $42 a pound, and we within a few months in April hit $63, and a lot of that was on the back of anxiety and uncertainty related to sanctions and the invasion of Ukraine and how that was going to potentially disrupt the entire nuclear fuel cycle. As those concerns abated, we definitely saw a pullback in the price of uranium, and that's because despite despite I think what people probably feel they should be doing, uranium and uranium services from Russia are not under any sanction whatsoever at this point, and the reason for that is that there are no alternative suppliers, which is another whole big issue unto itself. But the pullback in the price related to falling anxiety about potential sanctions or disruptions, coupled with just the general macro headwinds that all financial markets have been hit with this year, have acted as kind of a double whammy on the price of uranium. We saw the price kind of bottom out in the mid to high 40s, and August I thought was very interesting because it was a very quiet time in the market, and the price of uranium seemed to kind of stick for a number of weeks at $48 a pound. So, yes, it's disappointing to see the price move back from 63, but I think the price kind of held very firmly over the summer in a very illiquid, quiet market. And I think what underpinned it there was really the growing acknowledgement that we have this structural supply deficit in uranium that is not really being solved, and we have a growing kind of demand profile building out in the future as more and more nuclear power plants are getting life extensions and in some cases news of restarts like they're planning to do in Japan.
So we've had a lot of positive news here in the last few months. The U.S. has programs for the nuclear sector within this Inflation Reduction Act. Japan recently announced it's going to restart idled plants over the next few years. Even Germany is starting to waver on their decision to close down their 3 existing plants. But on the back of all this positive news, have you had a lot of inbound calls from new investors, institutional investors, family offices?
Yeah, as I said, August was incredibly slow up until August 24th. And August 24th happened to be the day that the Prime Minister of Japan announced that they were finally moving forward with more restarts. And, this has been kind of a broken record that's been going on for years, this idea of when is Japan finally going to turn on more reactors? And it's interesting that $60 a million BTU natural gas seemed to be the catalyst that they needed to help galvanize public support, and it's always been the public support that's been the impediment. And I think the new Prime Minister made it very clear that if they don't get more reactors back online, that they do run the risk of potentially having brownouts this winter. So we're seeing this this phenomena happen around the world right now, where governments who have generally been reluctant to support nuclear energy are coming out and doing policy U-turns because of the growing realization that energy prices are sky high right now, and that unless we've got reliable, affordable baseload energy in the mix, there are risks of blackouts and brownouts around the world. And it's a big issue, and it's unfortunate that sometimes you need a crisis to get politicians to make the tough decisions, but it's happening and it's starting to snowball. And I think that provides a much more stable future for nuclear energy and the utilities that run these plants, because it's hard to make decisions as a utility if you think you're always going to be on the bubble. And the Inflation Reduction Act, I think, was a really good step in that direction to give utilities the confidence that they are going to be supported financially by the government policy here. That, and if I wanted to sum it all up in one statement, it's really putting nuclear on a level playing field to renewables, which have gotten disproportionate financial support and government support over the last 20 years as we've built out all this intermittent power on the grid.
And John, having said all that, maybe you can just touch on the inbound calls that you're getting from investors. You mentioned at the onset that you've been on the road marketing, so maybe you can just give us some color.
So in the last few weeks, I would say we've been hit by two waves. One wave has been institutional investors and family offices that have really looked at what's been happening in the energy markets around the globe, and trying to figure out how nuclear fits within that landscape. And so we've had a lot of first-time investors call us, which I think is really healthy, because I think more and more generalists need to educate themselves around the market fundamentals, and I'm glad they're reaching out to us and asking for our perspective on that. The other wave of interest we've seen the last few weeks has been from the media, and it's interesting because I went marketing last week in New York, and the analyst that was with us said, he's been covering the uranium sector for over 15 years, and he always described it as the perception that he would face would be, oil and gas bad, coal worse, and then nuclear the worst. And he said it's unbelievable how the perception has completely inverted, that renewables and nuclear are being talked about together because they're highly complementary of each other. And I think that shift in sentiment and narrative and also the media coverage is helping to put uranium and nuclear power plants in a more favorable light. And I think that is, it's contagious. People feel more confident about the sector, and I think the sector has a really big opportunity to rise up and capture right now.
And the clients that you've been speaking with, would you define them as traditionalists, or are they energy-focused funds or ESG funds?
I would say they're very sophisticated investors, very knowledgeable, and running pretty significant size funds. Many of them are hedge funds and very wealthy individuals from around the world that are very interested in energy right now.
John, as we wrap up, I think a lot of investors have forgotten that the S&P's down 20%, the NASDAQ's down over 30%, Bitcoin is down 50%. What would you say to these investors that are frustrated with the space right now, and though it's not giving them the returns that they would like to see in spite of all this positive news?
Yeah, no, for sure. I mean, we're equally as frustrated. I mean, the price of uranium is still up for the year, and the miners are probably around break even, but they've obviously been very volatile. But I do think that you need to have a long-term view here, because this sector is on a long-term trajectory here. And the reason we feel that way is because the issues that the sector is trying to address are not going to be solved overnight. We're not going to see a supply response in the next 12 months that's going to be able to address a legacy issue that's been forming over many, many years. So we think that one of the things about uranium and nuclear that people need to be reminded of is it moves very slowly. It's not a just-in-time market like some of the other commodity markets. But as you said, you have to kind of keep it in perspective in terms of how difficult it's been in a lot of other markets, including fixed income. I mean, people have lost quite a bit of money this year buying just plain old treasury bonds this year. So it has been a very difficult backdrop, and I would say, stay long-term, think long-term, and obviously use these, moments of volatility as perhaps opportunities to, dollar cost average in and out of the sector. It is a volatile sector, and obviously you don't want to put all your eggs in one basket, but we think the fundamentals ultimately rule the day. We just have to work through some of these macro headwinds.
And if we were to use a baseball analogy, what inning are we in?
Well, last year I said the second inning, and I think we are moving through the game, but I almost think that we might be going extra innings here. I just think that this is going to take much longer to address. So we may be in the third inning, but I'm not convinced it's a 9-inning game anymore. And I say that because I just think that the amount of underinvestment in the sector that's happened during the bear market previously, the number of mines that have been put on care and maintenance during that process, is all creating a logjam, meaning the supply response that the industry will need over the next 5 to 10 years will not be solved if uranium stays at $50 forever. It's just impossible. And so you're going to have to see the price of uranium take kind of steps up to different price points in order for different miners with different deposits and grades to say, okay, I finally have an economic price. I finally have a contract that can help me ensure those pounds have a home when they're finally produced in the future. And I just think this dynamic is going to take multiple years to play out. So it's something you have to be patient with, and it's not something that is going to go to the moon overnight. I think it's a long-term secular trend, but the trend is clearly moving in the right direction.
Well, John, that was a great overview of what's happening within the uranium space and also with your Sprott products. If any of our viewers would like more information on the Sprott products, please check out their website, sprott.com. They have a section entitled Education, and it has a wealth of information on anything and everything you want to know about uranium and their various other products that they offer. Once again, John, thank you.
Thanks for having me.
David, thank you very much for joining us today. How are things in Toronto?
Well, Jimmy, we're doing well, and it's really good to be back on with you.
I'm happy to have you. David, so much has happened at Denison since we last spoke, including your unsuccessful attempt at acquiring UEX, and I want to get into that. But before we do that, why don't we just start with a brief overview of Denison Mines for those viewers who might not be familiar with the company?
Yeah, thanks, Jimmy. We're an advanced development, uranium development company focused in the Athabasca Basin region in northern Saskatchewan. We have a multiple asset portfolio approach, which is anchored by 95% effective interest in our flagship project, which is Wheeler River. Now, this is the largest undeveloped uranium mining project in the eastern portion of the Athabasca Basin, where we have all sorts of existing infrastructure. Right now, we're well advanced through the permitting process with our environmental assessment and our draft EIS nearing completion for submission, as well as a feasibility study that's in progress for the project, building on years of field work that we've been carrying out to upgrade from our PFS. The company also has a strategic interest in the McLean Lake Mill, 22.5% interest there with partners Orano Group from France. That company is a nuclear giant in our space. The mill has excess license capacity and is operating today, important part of the global nuclear fuel cycle. We tack on a few other assets in the mix, including an interest in the Waterbury Lake property, where we have a PEA on one of the two deposits there, close to the McLean Lake Mill. And then we have minority interests in a number of other properties that are pretty high flyers in the region, like at McLean Lake, where we have undeveloped deposits, Midwest, and even Millennium, rounding it all out with quite a large exploration portfolio as well. So all Athabasca-centric, but quite diverse in our mix. And so we're not a single project company, we're a portfolio company with a lot of levers to pull when it comes to bringing value forward for our shareholders.
David, as you mentioned, your primary or your flagship asset is Wheeler River, and this is what I wanted to discuss in more detail. Wheeler River has two deposits, the Phoenix deposit and the Griffin deposit. The Phoenix would be an ISR mine, the Griffin would be a conventional underground mine, and the economics associated with both deposits are totally different, so I want to examine the economics in detail. Why don't we just start with Phoenix? How large is the resource and what is the grade?
Yeah, Phoenix is it's a very high grade deposit. We're talking around 70 million pounds in indicated resources with an average grade over 19%. So this is amongst the highest grade assets producing or undeveloped in the world. But you know, in line with the high flyers in the Athabasca Basin, like McArthur River and Cigar Lake. What we've planned is in situ recovery mining at this project, and we would be the first ISR mining operation for uranium in Canada, with about a 6 million pound a year annual production rate for roughly 10 years, and potentially industry leading costs, both on an operating costs side and, more importantly, on an all-in fully loaded cost side, where we're projecting from our 2018 PFS all-in costs under $9 US per pound.
And you mentioned the grade of 19%. I just want to put that into perspective. You said that's in line with the basin, but given that this is an ISR project, I want to compare it to Kazakhstan. How would that compare?
Yeah, it's completely different when you think about the grade profiles. In Kazakhstan, you know, like an average to good deposit there would be a 0.05% grade, compared to what we're talking about, which is over 19% grade. So, you know, the ISR operations would be different too. In Kazakhstan, with those kind of grades, the ISR well fields are vast. They cover a lot of area. For us, with that high grade, it means that we have a very concentrated or tight footprint. So you'll see tighter well spacings, but you'll also see much less disturbance because we really are working in a small area. And it's that gives us an advantage because our design uses a freeze wall or a freeze fence, and that's not being used in Kazakhstan, but for us, it's a secondary containment to the environment, which allows us to really offer a physical barrier between our mining you know, at depth 400 meters. We've got a 10-meter thick ice wall that forms around the outside of our deposit to protect the environment. It's not cost prohibitive for us because we're talking about a very small area, but of course couldn't even be considered in Kazakhstan, given those grades and the vastness of the areas that they're mining and disturbing.
And you already mentioned this, the ISR mining method has not been used in the basin, but it is used, I believe it's around 50% of all uranium mined in the world is done so with the ISR mining method. But maybe you can just tell us about some of the tests that you and your team have done in the last few years to determine the feasibility of ISR within the basin.
Yeah, Jimmy, it's interesting because it is a very common mining method for uranium mining, but where we're using it is different than the norm with these high grades. And so our process plant is different. You know, even our well field is going to operate differently, and that's where we've really focused our efforts over the last 4 years. We have been very busy in the field and in the lab. In the lab, we're looking at leach tests and metallurgy so that we can understand how our core will respond to in-ground leaching, and also what we have to do on the surface in our processing plant. You know, our processing plant will be much simpler than you would see in other operations because the grade that we're pulling out of the well field is so much higher. We don't need to go through some of the steps that you would in a conventional low-grade ISR operation, where they need to concentrate that uranium-bearing solution to make it economic to process. So in the lab, we've made good progress. And really, the thing that people have mostly been following is in the field, where we focused on our permeability or the hydrogeologic model. So for conventional mining, of course, you're excavating rock. With ISR mining, you're moving solution, so your leach solution, through the host rock, and as it's moving through, you're leaching or dissolving the uranium that's there. So it's really important to understand how the solution will move through that rock, at what rate, you know, and what kind of grades will come out on the other side of that, the distances between wells that would be optimal. All of these details are necessary for us to take the project to a feasibility study level of confidence. And so that's where our focus has largely been. And we've carried out now multiple field tests where we've installed test wells and commercial scale wells, you know, in the ore body, around the ore body, below the ore body, to collect just an immense amount of hydrogeologic data. And all of that's really culminating in another industry first field test that is planned for this year. And we're calling that our feasibility field test because it is in support of our feasibility study, but it really goes beyond the tests we've done in the field before. Before we were using water that was in the formation, or we've even used a tracer element to be able to identify those hydraulic flows. Now, we'll actually be carrying out a controlled injection of an acidic leach solution into a part of the commercial scale pattern that we installed last year. And so with that, we expect to then be recovering a uranium bearing solution that would be similar to what we would expect to recover in production. And from there, we'd go through a neutralization phase and then actually a solution management phase. But all of this taking our level of confidence up to the highest possible level by putting the work we've done in the lab together with all the work we've done in the field with an actual field test of those two elements. I happened to just be at Wheeler River not too long ago and saw the progress around our test facility. And I'm really eager to bring more news to everybody on our test work, but also to get some of the community, our investor community and analysts up to the site to see the facility, because it really is going to be quite a credible test for this mining method.
And what's the timeline associated with this test and also getting results?
Yeah, Jimmy, we obtained our permitting for this middle of the summer, so we are fully permitted by both the province and the CNSC, Canadian Nuclear Safety Commission, to operate this. Construction started second half of the summer and is nearing completion. So we're looking at commissioning and kicking off our first phase in the not too distant future. And so it really is a third, fourth quarter 2022 news story, or a number of news nuggets, I think, that will come out of this. And all of that information then informing our feasibility study that's planned for the first half of 2023. So we definitely are like catalyst and news rich for the next, 12 months.
So that's a great overview of Phoenix and also the ISR mining method. Let's move on to Griffin. As we mentioned earlier, this is a totally different deposit. It's going to be underground conventional mining. The economics are totally different associated with this type of deposit. Why don't we just start with the resource, size of the resource, and also what's the grade on Griffin?
Yeah, thanks, Jimmy. It is different. We're talking around 60 million pounds in indicated resources, closer to 2% average grade. Now, I know that seems very low relative to 19%, but we do have to remember that 2% is actually quite a respectable and high grade for global mining operations and uranium mining operations. So Griffin does make a really nice add-on complement to Phoenix. It is capital intensive. Look, that is the reality of underground or open pit mining or conventional mining in the Athabasca Basin. This project, though, is actually quite competitive, and on the cost curve, you'll see that it slots in around MacArthur and Cigar. And it's much smaller than those deposits, and the grade's lower, but because we can use low-cost conventional underground mining methods and make use of existing infrastructure, so that's infrastructure that will bring the site for Phoenix and also the McLean Mill, where we have our interest there and there's excess license capacity. Those factors, that regional infrastructure as well, helps us keep CapEx to a reasonable place for a greenfields underground mine project in the Athabasca Basin. And that's what makes it quite competitive. We're talking in the range of 7 to 8 million pounds a year average production. And we've designed it to stagger with Phoenix, where you could have cash flows from Phoenix funding that CapEx for Griffin, so that we don't have to see excessive dilution to our shareholders. And really, look, we think Griffin is going to be poised to match the market when it most needs the pounds. Phoenix, we have lots of flexibility because of that cost profile, but Griffin, really, we'd like to have contract cover for a good part of that project, and producing it sort of in a staged development plan allows us to bring those pounds to the market when the market really needs it.
So that's a great overview of Wheeler River. I want to move on now. Another strategic asset in your portfolio is the McLean Lake Mill, which Denison owns 22.5% of. And as you already mentioned, Orano owns the balance. And I want to stress the importance of this asset to the mining and processing of uranium in the basin. Can you just tell us what % of global production is processed through this mill?
Yeah, for 2022, the mill is expecting to process around 15 million pounds. All of that's coming from the Cigar Lake joint venture under a toll milling agreement. And if you look at primary uranium production expected this year, that's going to represent over 11% of the market. So I always like to highlight that this mill, it exists. It's not a cartoon. It's not a sketch of a mill that will be. It exists. It's already been built. It's probably got about $1 billion of capital that's gone into it historically, and it's licensed. Now, not only is it licensed, we recently got an amendment to our license to allow us to expand our tailings facility. And so it has quite a lot of runway on it. And all of those details, you know, I just said a number of things there, Jimmy, but they all stack in, right? Like, it's built. So is it subject to cost inflation? No, right? It already exists. It's licensed. Okay, we've gone through the multi-year regulatory process. And we have tailings facility expansion approved, which means we have a runway to add and process material and store it at site and tailings. So this is really an important asset for the region, and we're really pleased that we have that strategic interest in it.
And what's the capacity of the mill?
It runs, well, it's licensed to run up to 24 million pounds a year. And that is important because the toll milling agreement with Cigar Lake can only go up to 18 million pounds a year. So today at 15 million pounds from Cigar, you're talking almost 9 million pounds in excess license capacity today.
So David, you just mentioned that it has the ability, or it's licensed to produce 25 million pounds a year. It's going to be doing 15 million pounds. What are you going to do with the excess?
Well, Jimmy, it's a unique thing to have that excess license capacity. And so we are working together with our partner Orano to look at projects that we can bring to that mill. One thing that we have in common on this is that neither of us wants to be in the toll milling business. We're both in the uranium mining business. And so it really is about finding mining projects that we own either together or as individuals, but as partners of the JV that we'd like to bring forward. So we touched on Griffin and how it could be a great source of feed for the mill. We've certainly considered that, and we look at where that could fit into the long-term profile. But right now, and it's pretty exciting stuff for our story, is that we're working together with Orano on assessing the McLean North deposit for further mining using the Sabre mining method. Now, that's a proprietary mining method we own together with Orano at McLean Lake. And we're also looking at the Midwest deposit for Sabre mining as well as ISR mining with a view to get Midwest production to McLean Lake. And again, we're together with Orano on both of those projects. And so those are our priorities, is to get those projects into the mill.
David, I want to move the discussion now toward your balance sheet. How much cash do you currently have and how much liquidity?
Yeah, Jimmy, we're in great shape on the balance sheet. We're talking over $55 million in cash, but we do have a much larger position when it comes to working capital and investments altogether. And that includes our physical uranium. You're positioned, we're talking over $225 million Canadian in working capital and investments.
I'm glad you brought up the uranium because I want to inquire about this, but you purchased that uranium in March of 2021 at around $30 a pound. It's now significantly higher, but I think you would agree with me when I said it's still quite low to where we think it's going to go. In the high 40s or low 50s, would you and your team entertain the thought of acquiring more uranium?
Yeah, we've been asked that question a number of times, and the answer is no. We're really happy with our 2.5 million pounds, and one has to remember sort of the commercial logic behind it. It was not a speculative purchase of pounds. Yes, as it turns out, we bought low, but that was not the design of it. We knew that was a potential outcome. The design was really to shore up the balance sheet. We liked the mismatch between where the equities had run to and where the physical uranium was at. And so we saw accretion in buying the pounds there, but it really was about de-risking Phoenix going forward. And so when we bought that material, it represented about a third of our CapEx for Phoenix. Now that the price is appreciated, that same 2.5 million pounds represents somewhere between half to 2/3 of our CapEx for Phoenix. And so we're happy with that level of holdings relative to our capital costs, and we really are looking to hold it for the long run and just to keep our balance sheet I think, in an envious position for a mining development company to know that, we can move forward confidently because we've got that capital there to de-risk the development.
Also in 2021, you and your team announced the implementation of an ATM. And I'm curious, have you been very active with the ATM this year?
We're pretty selective on the ATM, Jimmy. I had a view that the ATM could be very useful, but I think it works well with companies that are well capitalized and where they can be selective in terms of when they raise the money. And so with that balance sheet that we've just touched on, we really haven't been forced to be that active on it. So we have been selective. First half of 2022, just as an example, we've issued around 4 million shares, but at an average share price around $2 Canadian. So you can see that we're hitting the spots where we have liquidity and where there's good value in issuing stock.
David, we've gone through your primary asset, Wheeler River. We discussed your interest in the McLean Lake Mill, and we also touched on your balance sheet. There's one more thing I want to touch on before we wrap it up, and that was your unsuccessful bid for UEX. It was unusual in many respects. Can you just take us through it and tell us how it evolved and why your bid was not successful?
Yeah, thanks, Jimmy. It was unusual. Look, we've had an interest in UEX for a little bit of time and been following that company closely. And I think what became unusual was when our identity as a superior bidder was made public. And normally that's not the case. Usually bids, including ours, are made under confidentiality agreements or non-disclosure agreements. And in this case, UEC, who was competing with us, disclosed and what we would characterize as an inappropriate disclosure that we were the superior bidder. Now, we went back and forth a little bit, and of course, as we saw utility in acquiring this company, I thought we could bring value to our shareholders. But at the end of the day, nobody knows the UEX assets better than we do, right? We are in the Athabasca Basin. We have a joint ownership in one of UEX's most valuable assets, which is its shareholding in JCU, which has an interest in our Wheeler River project. And so we were really comfortable with where we were this whole time, and in increasing our offer, we knew and continued to be disciplined throughout that process to know that we could bring value to our shareholders. But at the end of the day, UEC prevailed, and they offered what the UEX board considered more than what we had on the table. And it's actually quite an interesting situation because so much of what we would perceive as the value of UEX comes from its 50% ownership in this JCU. And that's the company that we own the other 50% of. We purchased that 50% interest just over a year ago for $20 million. And so now we have a company in UEC, which has assets in the United States and Paraguay, that's come into the Athabasca Basin and paid a purchase price in the range of $300 million. And they've done that without having any ownership or any project synergies like we would have had with that company. So, I wouldn't necessarily say that UEC is overpaid because that's a question really of what they've given up to acquire the assets and buy out those UEX shareholders. But I think it certainly is telling the extent to which UEC pursued these assets, despite what was otherwise a pretty succinct story around U.S. uranium development, and focused in the USA to deviate and come up to Canada with competing offers to buy UEX, I think is quite an interesting thing for that company. Now, look, at the end of the day, we're okay with that because we had to blush a little bit, I suppose, Jimmy, in that somebody had so much interest in assets that we own an interest in as well, and was willing to pay such a high valuation. So we'll carry on. Our focus is on generating value by developing assets, and we are laser focused on doing that with Wheeler River. And of course, some of those other assets we touched on that I'm pretty excited about when it comes to the McLean Mill, so McLean and Midwest. So it was maybe dramatic, but at the end of the day, we can't be upset about somebody paying so much for assets that we already have strong investments in.
Made for an interesting summer.
You could say that.
And so can we assume that even though you were not successful with UEX, there might be other assets within the basin that you would like to acquire?
We're always, on the lookout for interesting assets. We've pretty much been involved in one way or another, any M&A opportunity that involves the Athabasca Basin, and we won't stop doing that. But our focus really is on generating value through project development with our portfolio, and we do like the assets we have, but we of course look at everything.
David, as we wrap up, you already said 2023 is going to be a news-heavy year, but why don't you just give us a summation of what shareholders and investors can expect in the coming months from Denison Mines?
Sure. Look, we are catalyst rich. The biggest stories coming up in the near term will be around the feasibility field test at Phoenix as we de-risk ISR in the Athabasca Basin. That information will feed into our feasibility study for the project expected in the first half of next year. And it's a critical study for us. It really will update for cost inflation and all these things everyone's talking about. We'll be able to have very current numbers that reflect the project and give us a basis to make a development decision. In parallel to that, we're working on permitting and the environmental assessment process, and so there are catalysts ahead on that. And what I get excited about, sometimes get the least amount of attention, but is the work we're doing on the other projects. Exploration, we've had some great results from partner-operated projects, all pretty close to McLean Lake and the mill. And we are working on those studies to bring ISR mining potentially to the Midwest deposit and our Sabre mining method to McLean. So I think I love the idea of us having more than the one project going and really bolstering our portfolio strategy in the next 12 months. And I expect that we can bring news forward that helps people see that we really do have a unique multi-asset development portfolio that's coming to the uranium market at just the right time.
Well, David, that was a great update on Denison Mines, and I want to thank you very much for spending time with us today.
Thanks so much, Jimmy.
Hi, Sama. Thank you very much for joining us today. How are things in London?
Things are going very, very well. Thank you, James, for the opportunity to join you today.
Sama, 2022 has been an incredible year for the nuclear industry and by extension, the uranium sector, beginning with civil unrest in Kazakhstan, the invasion of Ukraine by Russia, and the resulting sanctions placed on Russia. And I want to get your views on how these events have impacted the nuclear industry this year. But before we do that, why don't we just start off with a brief overview of the World Nuclear Association and what its mandate is.
Okay, very good. See, the World Nuclear Association, as you know, is the international organization that represents the global nuclear industry. We have currently 190 member organizations from 44 countries in all continents. And one thing that I really like to always emphasize is that we truly represent the entire nuclear industry, which is quite unique. So we have, of course, the uranium mining companies and, of course, the front end of the nuclear fuel cycle, conversion, enrichment, fuel fabrication. But also we include the utilities that produce nuclear electricity, but also all the nuclear vendors, the designers, the entire supply chain, and also in the back end, the organizations that are doing work in the area of used fuel management, nuclear waste management, decommissioning, and then also things that people don't normally associate with nuclear but are absolutely essential to the nuclear ecosystem, such as say transportation of nuclear materials or nuclear insurance or nuclear law and all kinds of finance and economic support. So, this is more or less the entire composition of the association, and our mandate, as you may imagine, is to provide the most up-to-date authoritative information about nuclear energy and nuclear technology, and provide the voice of the nuclear industry in all relevant debates at a global level.
That's a great overview. And one of the other things you and your team do is you organize in-person events, and you recently organized the first in-person WNA conference in London, which was the first one held in 3 years. How was it compared to past years in terms of attendance? And I just want to get a sense of, are people more excited about the industry now?
Well, I will give you a caveat here. I've been Director General for only 2 years, so I haven't experienced the symposium as Director General firsthand. But the data that I have is that this symposium has been one of the more successful in many, many years. We had, I mean, as you said, we didn't have a symposium in person for almost 3 years, or for 3 years actually. So people were quite eager to come back together, to be back together in person. As you know, the World Nuclear Symposium, beyond the event itself and the panels, discussions, the speakers, the event itself, it's also a very, very good venue for the global nuclear industry to come together. So a lot of deals are taking place, a lot of side meetings, a lot of side conversations, whether it's in uranium markets, whether it's deals as far as countries that are making purchases or intents of purchases of nuclear reactors. There is a lot of conversations that are taking place on the side of the World Nuclear Symposium. So I would say that it was a quite energizing event. There were almost 600 people there. It was fully attended the entire time, so all the sessions were absolutely packed. The social events were even more packed.
Sammy, you mentioned that there was a lot of meetings taking place, and I'm sure there was a lot of meetings taking place between utilities and also fuel producers or uranium producers. Do you think we're going to see a lot of announcements here in the coming weeks and months about deals that might have been consummated at the WNA conference?
Yeah, I suspect that we are going to see a lot of announcements. I mean, I think that you are seeing that everybody is moving very quickly. So on the one hand, to ensure the security of supply at a global level, we are seeing that there has been a lot of action. I mean, as you very well know, the global nuclear fuel market was quite robust, quite stable, but clearly the war in Ukraine has actually motivated a lot of people to maybe reinforce their backup plans and to maybe have additional sources of security of supply. So I think that we did see a little bit of that. And also, there has been an acceleration in many countries as far as their plans to use nuclear energy as part of the overall energy mix. So we have also seen some of those conversations. I mean, I don't know whether all of them resulted in actual deals, but certainly there is a lot of memorandums of understanding. There are a lot of very productive conversations on next steps and things like that for existing and newcomer countries to pursue nuclear energy.
Now, you mentioned, of course, there's a lot of utilities and a lot of uranium producers at this event. What about investors? Did you see a lot more investors this year, a lot more investors who have an interest within the uranium space and the nuclear sector?
Yes, definitely. We did see quite a few investors that traditionally wouldn't come to a nuclear energy conference. So obviously from the uranium market, for sure, we did see a few of those, but even more of at a global picture level, we did see quite a few investor banks and multilateral organizations that normally are not interested in nuclear power, trying to learn more about whether nuclear energy is an investment that they need to consider. There is a lot of interest both in large reactors and also, as you know, small modular reactors that appear to be perhaps a more shorter term investment by some investors. So there were a lot of conversations. We actually hosted a roundtable between the industry and the finance community to really open channels of communications. and I thought that was quite a good success. We plan to produce a report shortly. And overall, I mean, I really think that there is an interest between the finance community, decision makers, to try to align, you know, the right investments with the right projects and try to de-risk a little bit from the financial point of view these nuclear projects, but looking at maybe more innovative contractual arrangements and things like that.
I want to move on now and discuss the global nuclear industry and the future growth of the industry. What % of global electricity comes from nuclear power?
Well, I'm very glad that you asked me this question, because 2021, which is the year in which we have the latest statistics, was an excellent year for nuclear energy. So in 2021, the global nuclear industry produced 2,653 terawatt hour, which is up 100 terawatt hour from the previous year. And so this means, I mean, and we were almost ready to achieve the largest production of nuclear energy, which was back in 2006, I believe. So it was a great year. Nuclear energy currently produces 10% of the global electricity supply, but continues to be the largest source of low carbon energy in OECD countries. And of course, as you know, is the second source of low carbon electricity at a global level, second only to hydropower. So no, I mean, nuclear energy is doing really, really well. We also saw one of the highest global average capacity factors, 82% in average. So basically, the more than 400 reactors that we have at a global level, they all are operating incredibly well. We are making the most of the overall capacity that these reactors have. And in addition to these 436 reactors, we are currently building 53 nuclear reactors in 33 countries all over the world. And I think that this is very exciting, because many of these construction projects are taking place in countries that already have nuclear power, but some of them are taking place in newcomer countries. So this means that we have new countries that are joining the global nuclear family. For example, United Arab Emirates, they just started their first nuclear reactor a couple years ago. Then we have Turkey that are about to start their first reactor. We have Egypt that they just broke ground in their new construction. We have Bangladesh. Belarus also a couple of years ago started a first nuclear reactor. So a lot of very interesting developments and a lot of excitement about the role of nuclear energy at a global level.
And I'm always surprised when I hear this number that only 10% of global electricity comes from nuclear power. Is coal still the #1 source of electricity throughout the world?
Yes, that's what it is. I mean, coal and natural gas is now adding, but of course it may tamper down. We'll see. I mean, we are reaching this balance between our interest in meeting climate change constraints, but of course the current energy crisis is perhaps going to modify the direction in which we were going. Now, I think that's very interesting and at the same time a little bit scary, frankly, the fact that in 2022, today, the percentage of global electricity that comes from low carbon energy sources is about exactly the same as it was in the year 2000 at the turn of the century. To me, that's a little bit scary, because this means that we haven't really moved very much. This means that despite this perception that a lot of people have that we are investing in renewables and we are making all this progress in decarbonizing our economies, the reality is that no, that's actually not the case. So to me, this hopefully will wake up decision makers, policy makers, the global finance community, we really need to put all hands on deck to invest in low carbon energy resources, of course, renewables, of course, but of course nuclear.
Now, you touched on a number of countries that are currently building nuclear reactors, but the one country you didn't mention was China. They've undertaken a very aggressive nuclear build out. How many reactors do they currently have, and how many do they plan on building?
Yeah, no, China, as you said, definitely has taken nuclear energy very seriously. I mean, this impetus started because of air pollution constraints, because of coal power plants, but they really have a very serious policy to engage nuclear as part of the overall energy policy. So China today has 54 nuclear reactors. That is 52,000 megawatts electric of capacity, and they have 22 more reactors under construction. So that is quite something. I mean, this means that in a few years, in the next couple of years, China could surpass France as the country with the largest capacity or the largest number of dedication of nuclear. And what is interesting is that in China, nuclear energy only is 5% of the total electricity, which that means that there is still a lot of ground to be made in order to move ahead. But also, I will tell you that if you look at the east coast of China, basically where all the population is actually located, many of those provinces in the east coast of China actually have up to 25% of their electricity coming from nuclear. So maybe at a global level in China it's only 5%, but in some provinces is quite significant.
So I want to move on now and discuss government policy. Because of the sanctions placed on Russia and Europe's ban on Russian oil, which comes into effect on January the 1st, many European countries have to find an alternative source of power, and the obvious choice to me, anyhow, would be nuclear power. But some countries, such as Germany, are still very reluctant to accept nuclear power. Why is this?
Well, I think that every country does have the right to decide what their overall energy mix should be, and obviously, historically, Germany in the recent years they decided that they want to move forward without nuclear energy. So that is their choice. It is unfortunate because nuclear energy in Germany has a very long tradition of being a key element of the overall energy mix in Germany. And it is a pity because they have the expertise and the knowledge and they could really take advantage of that. But okay, so right now nuclear energy in Germany is probably, with the last 2 reactors that they have, is less than 3 reactors that they have, is less than 10%, I believe. And I think that currently they have put in place a policy by which these reactors, 2 of those 3 reactors, are going to be kept in reserve, trying to see whether they are going to be needed in the future. Frankly, I think that there has been a lot of political capital that has been spent in Germany to move against nuclear energy, and I think it may be just very difficult for that political investment to be reversed. And at the same time, I mean, I think that if you look at the utilities and the industry in Germany, they've been at the mercy of the change of opinion of the government, and I think that they would really have to be convinced very, very seriously that is worth their while to continue working with nuclear. I mean, at the end of the day, you know this very well, any industry, and the nuclear industry is no different. What you need to have is certainty. You need to understand what the future looks like, and you don't want to have changes of policy every 5 years or anything like that. So that I think that that if there is much more certainty in what the policies are going to be in Germany, that will change.
As we wrap up, the WNA is always organizing amazing events. Do you have any events coming up as we go into year end?
Well, so for the end of the year, we have a few events that we are organizing ourselves. One of them that I cannot give you dates just yet, but I hope to be able to send you the information so you can share with your colleagues and your audience. We are going to launch the World Nuclear Supply Chain Report. This is a report that we produce every 2 years that kind of summarizes basically what I just said. What is the industry doing in order to put itself together to enable this growth that we are seeing? So we are going to put in an event together to launch this report, and I will let you know as soon as that is available. But more than anything, there is 2 events that are important for the global nuclear industry. We will be in middle of October, we will be in Washington, D.C. in the International Atomic Energy Agency Nuclear Energy Ministerial, which is a very large event. It's 3 days where the International Atomic Energy Agency is bringing together not only the global nuclear industry that we are happy to bring, but also the governments and the policy makers, the decision makers, and we also will bring the finance community to actually maybe move forward in all these discussions that we just had. And then finally, the other thing that I think is important for everybody really is COP27, that, as you know, will take place in Egypt in early November. And it is once again a very important event because it is the follow-up to Glasgow, and many countries are now expected to actually deliver on their promises and start to I mean, we really need to start seeing how we are doing the stepping stones from 2022 to 2050 with all these goals that we will have. So we will also be in Sharm el-Sheikh in Egypt, bringing forward nuclear energy and the role that it plays in global decarbonization.
You got a busy few weeks coming up.
We do.
Well, Selma, I want to thank you very much for sharing your time and your insights with us today. I would encourage our viewers to check out the WNA website. It has a wealth of information on there, anything and everything to do with the nuclear power industry. Selma, once again, thank you.
It is my pleasure. Thank you.
Hi, I hope you're enjoying the conference. Just a friendly reminder, subscribe to our channel, give us a like, and also leave a comment. Thank you for your support. Hi, Tim. Thank you very much for joining us today. How are things in Saskatoon?
Yeah, thanks, Jimmy. Yeah, it's great to be with you. Thanks for having us. And yeah, Saskatoon's great. A little cloudy, no snow on the ground, so it's all good.
Tim, IsoEnergy has been very busy since the last time we spoke with ongoing drilling results on your various properties, but the big news was the release of your initial mineral resource on the Hurricane deposit. And before we examine the details of that resource, why don't you just provide us with a brief overview of IsoEnergy for those viewers who might not be familiar with the company?
Yeah, sure. Thanks, Jimmy. Yeah, so IsoEnergy is a Saskatchewan-based uranium exploration development company. We've got more than 20 projects, properties up in northern Saskatchewan, predominantly on the eastern side of the Athabasca Basin. We were spun out of NexGen really only about 6 years ago. They still maintain a majority ownership at just over 50%, and yeah, we're now home to the Hurricane Zone deposit on our Larocque East property.
So let's jump right into the news. In July, you released the mineral resource on the Hurricane deposit. Tell us about the highlights. How many pounds? What's the grade?
Yeah, so we picked up the Rockies property back in 2018, and the team did a great job of very quickly finding mineralization on that property. And really over the last few years, we've done 6 drill programs, all leading up to what you mentioned, which is the initial resource being put out this July. The Hurricane deposit is 48.6 million pounds of indicated resource. And it's now seen as the highest grade uranium deposit in the world. It's an average grade of 34.5%, of which the high grade core, 44 million pounds of that, is over 52%. So really just an extraordinary deposit up in the eastern part of the Athabasca Basin.
So you just mentioned that it's the highest grade in the world. I want to put this into perspective now.
Yeah.
How does it compare to other deposits within the basin?
Yeah, so the 50 million pounds, the size-wise, there's a lot of big monsters in the basin, the Cigar Lakes and McArthur Rivers, and they are incredibly big and high-grade deposits. NexGen, over several 100 million pounds. So at 50 million pounds, it's not the biggest deposit in the basin, but it's the highest grade. Some of the other unconformity hosted deposits that have come and gone in the past, certainly Cigar Lake. It's not to say that within Cigar Lake, within that 300 plus million pounds that it was at the beginning, there might have been 50 million pounds at 34.5%. But as a standalone deposit, Hurricane is the highest grade deposit, and it holds up certainly on grade with the best deposits in the basin.
And Tim, now that you have a resource of 48 million pounds, now what? What are the next steps?
Yeah, so obviously we're extremely excited about what the future holds for Hurricane. We're starting to look ahead to a concept study. What kind of mining method would you deploy at this deposit, for example? And also, there's some interesting characteristics that the core of the deposit kind of butts right up against the property border. So, if you're taking this forward on a standalone basis, how do you mine that, up against a border like that? And also just, timing wise, there is, another owner on the other side, Cameco Rano, have that property. If they, go ahead and do some work to kind of determine what's on the other side, how does that, whatever they come up with is obviously going to determine how you move forward with this deposit as well. So we're doing what we can. We don't have any control over that. We're doing what we can on a standalone basis to slowly move it forward. We'll start looking at, environmental impacts, in the area, all those kinds of things we can do to advance it, and at the same time keeping an eye on, what's going on the other side of the border.
And just to clarify, so you're going to move ahead with a concept study, and then eventually you want to move toward a PEA?
Yeah, I mean, we'll move ahead with that concept study, figure out some of the next steps. I mean, all subject to board approval and all that good stuff as we move forward. And yeah, ideally you would take those next steps and then move towards a preliminary economic assessment to figure out, exactly what happens with the deposit.
And just give us some sort of rough timeline. When would you make a decision on that?
Yeah, I mean, the concept study, we're working with a group to kind of put together an outline and again, get that by our board to make sure we're on the right track with the next steps. And yeah, over the next several months, as we get that piece done, we'll see if there's more work. I mean, maybe on the mining side, do you nail it or narrow it down to, to one mining method or a couple, and depending on where that kind of comes out, then we'll look ahead to, okay, if we've got those fundamentals nailed down, then work towards a PEA.
Tim, I want to move on now and touch on exploration. Now that you got your resource completed on Hurricane, but you and your team have been busy exploring this past summer. Maybe you can just give us an update. How many rigs did you have and what the targets were?
Yeah, we're actually just been finalizing the program for the summer. We did right around 7,000 meters, which is what was planned for this summer program. We had 2 drills going. We did some follow-up drilling on our Rockies property, not right on Hurricane, but to the east, right sort of to the eastern border of the property, and also some just a couple kilometers to the east of Hurricane. So some of that work was done. We also went to the north. There's a Kernahan trend historically at the top of that property that's had a very little bit of work done, and we put some holes in there as well. We also went back to our Geiger property. So we did some work last year. We followed up with some geophysical surveying and went back and sunk some holes there. And we also went on to our Trident property, which is on the eastern part of just outside the basin, actually. So it's outside the sandstone overburden part of the basin, so just on the outside edge. And we did some drilling there as well, which is, fundamentally right into the basement rock, right from surface. So we're just been finishing that up. The team, just came back just within the last few days, and so we'll be getting some information and news out on that imminently.
And what do you have planned for the winter?
Yeah, so along with the drilling, we also conducted quite a bit of geophysical surveying through the summer as well on 5 of our properties. So we'll take a look at the results that are coming out of that work, and coupled with the results of the drilling, we're still waiting on a lot of geochemical work and results from that drilling. And the team is sort of plotting out the next steps on many of these projects, some that we were working on this summer, and a couple of other projects that we've done work on the geophysical side recently. So yeah, we're just putting together budgets, we're mapping it out, and based on some of the information still to come, we'll finalize a program soon, and obviously share that information when we have it.
And I'm sure your drilling crews are looking forward to winter.
Yeah, I mean, honestly, incredible group of people that, are willing to go up in that weather. They had a tough winter last year, but boy, they performed, incredibly. And our drilling team, Bryson, we've used them since the company was founded. We've gone through a lot with those guys, but no, they, in a lot of ways, I think they, it's kind of hit or miss whether they prefer the bugs or the cold. So yeah, they do a great job in the winter as well.
So you just mentioned you're working on budget. So why don't we move on to your balance sheet? How much cash do you currently have?
Yeah, we're still, in good shape. We've got just right around $4 million Canadian in the bank. We haven't raised any capital since December of 2020. So, we've been very meticulous with the capital that we had in place. There seems to be good support for raising capital. We'll continue to look for the right time to go to the market, and that'll be a combination of when the market looks good for our share price, and also we've got a very important partner at NexGen when it makes sense for them, and but we're good through the end of the year. We've got everything we need to pay for the summer program, and we're good going into 2023. So we've also got some marketable securities on the balance sheet. So depending on the day, between $7 and $8 million in securities. So that provides some additional liquidity for us and some flexibility.
Tim, can you just remind us what those marketable securities are?
Yeah, most of it comes from 92 Energy. We sold some properties to them back in the day. I think we're still right around a 14% shareholder in that company, and also Consolidated Uranium. We hold some shares in that company as well.
So a few of our presenters today spoke. Everybody was at the World Nuclear Association in London a few weeks ago, and they all provided insights. What sort of insights did you take away from the conference this year?
Yeah, I mean, the biggest thing was it was good to have the industry back together. It had been 3 years since the last conference, so I think people were just in general happy to see each other and in person for a change. I mean, the market, in 3 years has really changed fundamentally, so it's really incredible. The narrative around nuclear, globally is so positive. Whether it's certainly, we were all in the UK, and the UK is pushing to build additional units. Countries like France are really recommitting. South Korea, there's just enormous amounts of positive energy around nuclear itself, and the understanding that even Joe on the street now has that it really is impossible to fight climate change without nuclear as part of the solution. So that's incredibly positive. On the market side, things are starting to turn, and we've gotten to this point where we see price move around a lot, get into 50, 60. But one of the really positive things is when it has, kind of retreated a bit, it seems to be stuck in that, mid to high 40s. So that even that's positive, I think, is a bit of a floor that, the price is not really going anywhere at this time. And there's, the fundamentals are still there. Obviously, there's an enormous amount of interest and concern around, the Russia situation and what that means to the market. Obviously, it causes utilities a lot of concern, not just on uranium, but on the whole fuel cycle. They're big suppliers of enrichment, conversion. And so, yeah, it's fundamentally changing the market. And frankly, we don't even, I think, know exactly how much it's going to change the market yet. It's still all, happening in real time. So things very positive for the uranium side. Still a lot of, utility buying to do, and out in time, there's still a big gap on the supply side. And so, one of the positives, I think, especially for an ISO Energy who's got a world-class project in northern Saskatchewan, is, jurisdictionally, Saskatchewan's becoming more important than ever. Just the whole geopolitical situation, Russia, some concerns in Kazakhstan earlier in the year, with civil unrest, little things like that, are really causing people to look at where do they, first of all, we need more uranium in the future. Second, where do we want it to come from? And I think, Saskatchewan is probably right at the top of the list.
Tim, as we wrap up, what can shareholders and investors expect in terms of news flow from ISO Energy in the coming weeks and months?
Yeah, so like I said, we just finished up the summer program. We will put out some results from that program very soon. We'll likely follow it up with assays. We won't have those assays available right away, but we'll get the initial drill results out. And then, like you mentioned before, the winter program, what's ahead for us? Well, we'll finalize that. We're in the budgeting process now, and going through that process with our board. So once we get that, we'll share the details for the winter program. And also as we advance and decide on steps to take on Hurricane, we'll certainly be sharing that with folks in due course as well.
Tim, that was a great update on ISO Energy, and congratulations on the resource, and we look forward to the results from your drilling campaign. Once again, thank you.
Yeah, thanks, Jimmy. It's obviously an exciting time for ISO Energy and the nuclear industry. So yeah, we appreciate your support, your interest, and happy to provide an update anytime.
Thanks again.
Thank you.
Justin, thank you very much for joining us today. How are things in Southern California?
Things are good. Yeah, we had a pretty steep spike in temperature a couple of weeks back, or I guess that was last week. It was maybe about 10 days of a heat wave, but it went from that instantly into autumn. So today it's low 70s and partly cloudy, just gorgeous.
Yeah, it's hard to believe we're already into Q4. Justin, every time we speak, there's a tidal wave of positive news for nuclear power, but given you're based in the US and the US has the largest nuclear fleet in the world, I want to focus on what's happening in the US and more specifically with government policy. There's been a lot of it put forth by the Biden administration and also many different states. And so I want to focus on this. And why don't we just begin with the Inflation Reduction Act, which was introduced by the Biden administration in August. And within that act, there was also $369 billion allocated toward the clean energy bill. Can you just provide us with an overview of what exactly was in that and how it's going to benefit the nuclear power industry?
Sure. Yeah, this was definitely a significant piece of positive news over the past couple of months. And it's the United States has not built new nuclear in a long time, with an exception of the Vogtle plant, which is set to actually come online finally next year. But with that exception, there's been essentially no new construction of nuclear for almost a couple of decades at this point. And so the primary focus for nuclear advocates in the States has not necessarily been in the massive uphill battle of trying to influence new builds, but to extend the lives of the existing fleet. It's about 20% of the electricity grid in the United States, so it's an absolutely vital source of electricity, and of course it's base load and it's carbon emissions free, et cetera, et cetera. And so to that tune, the stage was sort of set a number of years ago with the Section 232 petition that was filed by UR Energy and Energy Fuels, which they were requesting, I believe it was 20% of the nuclear fuel requirements for the domestic utilities to be like a quota. They would have to buy that from a domestic source. That Section 232 essentially got shut down by President Trump, but he did implement a nuclear fuel working group, which then spent the good part of the next, I think it was 9 months, looking more deeply into the problem at the time, which was heavy reliance on foreign sources of uranium, more specifically Russia or Russia-influenced locations. That nuclear fuel working group came out with a number of recommendations. One of those recommendations was to establish a uranium reserve, federal uranium reserve. There were a couple of other recommendations for supporting the nuclear fuel cycle in the United States, but it just got totally washed over by COVID and election madness in 2020 and just got really put on the back burner. Nobody was even talking about it or thinking about it a couple months after he came up with that conclusion, or the nuclear fuel working group did. But it at least set the stage and made it public and kind of more well known that the fuel cycle in the United States is a problem, with 20% of the grid producing essentially zero of the necessary element to create that energy. The mined uranium, which I think this year there's maybe going to be a few 100,000 pounds of mined uranium in the United States, and they're going to consume about 47 million pounds of uranium this year. So that put it at least on an alert, let's say. And now with this energy crisis and the particular bifurcation of the market with the West, essentially the US and the EU, we're talking about the US here, trying to reduce and eventually eliminate its reliance on Russian uranium. This Inflation Reduction Act finally passes. It has a number of elements from the Build Back Better bill that was shot down. But one of the elements in there is support of nuclear and a recognition of nuclear as essential clean baseload power. And so the biggest piece of this that supports nuclear is a $30 billion tax credit over 10 years for nuclear energy production. And so nuclear operators are going to be able to apply for this tax credit and receive some financial support for the recognition that they are producing clean energy. This is a pretty big deal. A quick back of the napkin analysis says that this should be sufficient funds to keep any reactors that are on the quote unquote chopping block due to profitability online. So the Diablo Canyon plant in California was just had its lifetime extension for 5 years. It was set to come offline in 2025. They extended it to 2030. It's a start. I would love to see it extend beyond that, but hey, it's something. This is being extended by a bill that was proposed and then eventually passed by the Democrat majority legislature in California, signed by the governor. And I believe this is going to be a loan to PG&E in order to maintain the operation of the plant. So I don't think it's had any influence from the Inflation Reduction Act necessarily directly, but obviously going forward, it'll have that support, financial support from the government. One of the big things that happened right after this act passed was the Palisades plant in Michigan was shut down, and that was a scheduled shutdown, scheduled decommissioning, which was really kind of a bummer. There was, there's a number of elements of maintenance that the operators, which is Holtec, apparently did not want to front the money and put up that expense because the plant was not profitable enough to justify those maintenance expenses, and nobody wanted to buy the plant. None of the other operators in the United States wanted to take it over, so they shut it down. And about a month, 6 weeks after it shut down, after this act passed, Holtec is talking about bringing it back online. And because this is actually going to support, this Inflation Reduction Act is going to support that plant to continue to operate. So that's a really cool piece of news. Yeah.
And you mentioned earlier that the U.S. consumes 46 to 47 million pounds of uranium annually, but yet it actually produces very little. Where does the U.S. get its uranium from?
It gets about 20% of its enrichment from Russia, so it's enriched uranium from Russia. A lot of the U3O8 will come from Canada, Australia, Africa, and Kazatomprom, Kazakhstan. Primarily, I would say Kazakhstan is probably the biggest. Kazakhstan and Canada would be the biggest providers of U3O8 for the United States.
So something else the Biden administration did recently, it requested an additional $1.5 billion for HALEU. Can you just tell us what that is exactly, and what does this mean to the nuclear power industry in the US?
Sure. Yeah. So this is in addition to the funding, and there was some funding in the Inflation Reduction Act. I apologize, I don't remember exactly how much it was for support of enrichment in the United States. And enrichment really is kind of the pinch point because the United States has a very small amount of enrichment. They have, I think, 4.7 million SWU out of the almost 26 million SWU in the West, which is only 40% of global. And it's not enough SWU to provide all the enrichment that the United States reactors actually need. And so, and they will have conversion again when ConverDyn's Metropolis plant is restarted next year. That's in process right now. So, they need to expand enrichment. So the funding, some funding allocated Inflation Reduction Act, and this additional $1.5 billion that's being requested is for the DOE to actually buy enriched uranium, and they want to buy specifically low enriched uranium and high assay low enriched uranium, the HALEU. The HALEU would be a higher enrichment than LEU, so that would be anywhere from 5 to 19.9% enrichment, and that would primarily be for the proposed adoption of advanced nuclear and SMRs in the United States. And so right on the heels of that request, and so basically how that would work is the DOE would actually be buying enrichment, and as a consistent buyer with funding from the government, that would support the production of HALEU in the States, and they would have to buy it domestically, right? So it's not just to buy it from wherever, it's actually to foster an entire nuclear fuel supply chain in the United States. And that would be that's intention, that funding. But right on the heels of that request was a report that came out of the DOE, the Department of Energy, that they looked into all of the existing operating coal plants and recently shuttered coal plants to determine how many of those would be viable for small modular reactors to replace the coal production. And this news is it's so incredible. I mean, really it is. This is not something that any uranium investor, a nuclear investor, would have dreamt of as even a remote possibility, even 3 years ago or even 2 years ago. So the fact that the federal government, not some kind of nuclear lobby, not nuclear advocacy groups, the actual government of the United States is saying, hey, these SMRs are something here. Not only do we want to secure a reliable fuel supply to power them, but here are all the viable options for implementing them where there's an existing grid and we can shut off the coal plant, reduce a massive amount of emissions, and implement SMRs. If there was a small modular reactor, even a fraction of a gigawatt, right? So most large reactors are right around a gigawatt, and SMRs are typically, they can be 1 or 2 gigawatts or 1 or 2 megawatts, all the way up to maybe 300 or 400 megawatts. But even a smaller SMR would plug into where all of the existing coal plants right now, that would more than double the uranium demand in the United States. And so this is it's a big kicker for this thesis that is not something you can hang your hat on yet. It's not something you can model out demand towards the end of the decade yet, but it has the potential to be a serious demand addition to these models and to this thesis. I mean, SMRs could potentially be the buyer on the margin, 5 years from now, and could help to sustain a bull market for the commodity, if not send it to higher prices. So it's very, very good to see. Now, with all of that said, there's a few key Democrats that are attempting to block that funding request, because essentially saying, well, why do we need to spend this money on this when we can just get it from Russia? I mean, this actually came from a number of Senate Democrats. So we'll see if that funding comes through. But either way, they're doing what they can to move in that direction. That's really positive.
So Justin, I want to play devil's advocate now because you just listed many positives about what's happening in the US, and we could spend another hour on what's happening globally within the UK, within Japan, etc. But yet the uranium price, spot uranium specifically, isn't really moving the way you would think it would with all this positive news. And so we're trading in the high 40s or low 50s, but I guess my question to you is, why isn't uranium trading at 60, 70, or 80 bucks? What is it that we might be missing?
So the spot market is trading on vapor. All it takes is one seller that is either motivated or price insensitive, and essentially, no real buyer demand in the spot market. And so the utilities are essentially staying away from the spot market. At least at the moment they are. And the reasoning for that is the buying of pounds in any sort of volume really moves the price up quickly. It's basically universally known at this point that the spot market is quite thin. There's a decent, a couple million pounds a month that are produced by primary producers that are price insensitive sellers, let's say. Primary one would be BHP from their Olympic Dam mine. Uranium is a byproduct of copper and gold production there. And then there's some other, the Uzbeks tend to sell their uranium at, market prices to traders, and they can kind of arbitrage that. So there's a little bit of pounds that come in and out of the market on a monthly basis, but really the spot market has been more of a financial player's story. And with, risk being off in the markets, Sprott has purchased 1 million pounds this month so far, but the past 3 months, they've been almost exclusively at a discount to their net asset value. They've been really unable to raise a lot of money and therefore buy a lot of uranium. But the other side of the coin is that there's a complex set of variables right now that are setting the stage for a very significant contracting cycle for utilities. And this is really what moves the needle in terms of pricing. So utilities, their primary way that they procure uranium is through long-term contracts. And over the past decade or so, they've been able to top up inventories and avoid coming to the table with producers like Cameco by purchasing the spot market, by purchasing what are called carry trades. Basically, they're securing a midterm contract with a trader that will then go out and buy it on the spot market, and they'll add their profit margin and the cost of capital and interest rates and whatever. And that's what the utility will secure for that midterm contract. And the carry trade did a lot to work through a lot of above ground mobile inventory over the past number of years, but it also allowed the utilities to access that mobile inventory through these midterm contracts with carry traders and avoid long-term contracting with primary producers. So right now what's happening, and this is especially poignant with the bifurcated market where 70% of nuclear utilities in the world are located in the West, let's say, the OECD countries. That's North America, most of North America, Europe, and a number of other locations, but that's pretty, United States, Canada, and Europe are really the primary buyers, and that's, close to 70% of global uranium demand. But there's not enough conversion and enrichment, so in the West to supply the West. So what's happening right now is Western utilities are securing conversion and enrichment contracts first. That's closer to the end product that they need, which is fabricated fuel, and they'll always secure those services first. What happens after that is demand comes to uranium because they have to buy the uranium to put through those conversion and enrichment contracts. So entities like Cameco that have been producing reliably for decades, located in the West, have plenty of clientele in the West, are seeing massive demand. So they've already signed, I think it's 60%, something like 45-ish million pounds in long-term contracts this year. And they have a lot of discussions on the table right now with utilities to sign further contracts. Now those discussions are complex, right? Because nuclear utilities, their ideal situation is to sign a fixed price contract. And so if they're shooting for 2027 to 2032 delivery, and they can lock that in at a certain price, they're going to do it because they can, not only is uranium itself, U3O8 is only at 4% of their total operating budget, it's very small, but then they know going out into the future what they can budget around with these fixed price contracts. With all of that said, producers are not wanting to sign fixed price contracts. Producers are wanting as much market reference as possible. So you'll have a traditional 60-40 contract, let's say, for Cameco, And the contracts can vary. There's some nuance, but for the sake of discussion, this is a common type of contract that we've seen in the past, which would be 60% would be referenced to the spot price at the time of delivery, and 40% would be fixed. So they might sign, a 2025, 2030 delivery, 500,000 pounds a year of U3O8, and that would be at $50 per pound fixed, and 60% reference to the spot price at the time of delivery. So they leave themselves a bunch of upside. Now the discussions are more along the lines of the producers hold the cards now. It's a seller's market now. And they're saying, we want market reference. So these contracts are more than likely predominantly, if not entirely, referenced to the market with floors and ceilings. So the floor part of that contract kind of gets them their fixed portion, right, for the producer, not for the utility. The utility, okay, they know we're going to spend at least this. And then the ceiling says, okay, if it goes to $100 a pound, we're not going to spend more than 90 with that ceiling, whatever it might be. So the conversations are really difficult right now, and the utilities are seeing this situation. Some of them are not really believing it. They're going to draw down inventories for a little bit longer and wait and see if Russia, let's say, opens back up for their own procurement. As of now, Western utilities are not signing new contracts with Russia, but the conversion and the enrichment services have gone absolutely haywire in the West this year, and they're both up over 100% year to date. And so utilities are signing those contracts in the West, and that does equal U3O8 demand. You do the enrichment first, and then the conversion, and then you go to your U3O8. So that is coming, and when that does come, that will also move the spot price. And so the spot price isn't necessarily only moved by financial players. They're the biggest player in the market, but the two markets are inextricably linked. And so that demand's about to come. I mean, it could come in a matter of weeks potentially. I do believe this is a Q4 story for uranium.
So we're almost into Q4, and I believe you said before globally in long-term contracting, 75 million pounds has been contracted. Is that correct?
There's about 78 that have been contracted so far this year. Yeah.
78, and you've also told me before you think we can hit 100 million. Do you still believe that?
I feel confident in that number. Yeah.
So you're still very bullish.
Very. Oh yeah. I mean, the only thing that's keeping me from being 100% bullish is just the influence from the broad markets. I think is undeniable and very, very difficult to predict where things are going in the short term for the broad markets. Nobody can really accurately predict what the Fed is going to do. And, I follow a number of very intelligent macro guys that are way smarter than me with broad market macro, and they have sometimes perfectly opposing viewpoints. It makes sense to me that the Fed is trying to get aggressive to get inflation under control. But I honestly think their deficits are so big, they're going to have to print money, and they're going to have to print money to help with the recovery from the recession that they're causing right now. And the money printing adds to more inflation. I think they've caught themselves in an undeniable loop. And so I don't think this goes on for much longer before they pivot. And the sense that I'm feeling, kind of my intuitive sense, just watching charts, watching markets, is there's a lot of money that wants to be long, and they're just kind of waiting for the signal. That's the feeling I get. Now, with that said, there certainly are markets that have been performing decently. I mean, URNM is about flat on the year, maybe slightly down. When you compare that to some of the big tech companies and the NASDAQ and the broad market itself, it's outperformed significantly. And then you've seen, oil and gas just do extremely well this year as well. So there's always a flow of money. Money needs a place to go. And we're very much in the camp that money will go to what is working and go towards the themes of the decade. I think that's energy, and we're kind of in this nuclear renaissance right now. So the broad market, until there's a meaningful, consistent move up in the price of uranium, which I believe is coming, we're probably pretty coupled to various other markets. Sometimes that's oil, sometimes it's the dollar, sometimes it's the S&P. But we tend to kind of get coupled with that when there's big moves down in those markets, and when the price of uranium is not moving, or there isn't some individual catalyst that's moving the market, the uranium market specifically.
No, you bring up a very good point about the Fed, and it shocks me how far behind the curve they are, but that's another topic for another time. Justin, just one more question before I let you go. Every time we get together, I see you sitting in this beautiful office, but I never see anyone there. Is everybody working from home?
You know, they didn't show up today. I'm gonna have to have a talk with the team. No, I do have a team. I've got about 4 people that help me. One of them appears on the webinars. His name is Rick Sachs, and he's retired hedge fund guy, but he lives in Chicago, so he's not here with me. And then there's a number of kind of back end support people. So in my office here is just me. I just like to have a larger space. I like to feel like I'm surrounded by hardworking people and activity, even if they're not physically in the space with me.
Justin, that was a great overview of the Inflation Reduction Program and what it means for uranium. And I want to thank you very much for sharing your thoughts with us today. To all of our viewers, I would remind you to check out Justin's website, Uranium Insider. He publishes the only newsletter that focuses on the uranium industry. And there is a link below. Once again, Justin, thank you.
It's my pleasure. Good to see you again, Jimmy.
Hi, Leigh. Thank you very much for joining us today. How are things in Vancouver?
Yeah, good. Thanks, Jimmy. The weather's in the mid-20s. A beautiful city when the sun's shining in Vancouver.
Oh, it certainly is. It's one of my favorites for sure. Leigh, the positive news at NexGen just keeps coming. You recently received approval on the draft EIS from the Canadian Nuclear Safety Commission, and I want to dive into this. But before we do that, you were just recently at the World Nuclear Association conference in London. Why don't you give us an overview? How was it? How were your meetings?
Most positive conference I've attended, and I've been in the nuclear industry since 2002. So in the last 20 years, it's the most popular, positive, I should say, sentiment I've experienced. And I'd say a good example of that is the UK Prime Minister, the new one, in a maiden speech to Parliament, mentioned the word nuclear 5 times in her maiden speech. And that, along with those attending, Japan were heavily represented at the conference as well. So, Jimmy, it's the most positive I've ever experienced in my 20 years in the sector. And what's really pleasing, it really does feel like the general population throughout the world has finally recognized nuclear for its science and fact in the generation of clean, safe, baseload energy. And the provision of energy is more and more paramount. We're seeing what's happening in Europe, in California, where they've got rolling brownouts. The world needs more energy, and with the advent of electric vehicles and the requirement for a clean air energy policy, nuclear is the go-to solution to provide clean baseload power.
So that's a great overview of the WNA. I want to move on now. Why don't we just start with a brief overview of NexGen Energy for those viewers who might not be familiar with the company, and maybe you can just highlight aspects of the feasibility study, touching on the CapEx, the NPV, IRR.
Yeah, we are developing the Arrow uranium deposit on the Rook I project in the southwestern section of the Athabasca Basin. The Athabasca Basin is the home of high-grade, high-tonnage uranium deposits. We have a very unique setting in that we're in a very competent basement rock with an exceptionally clean metallurgy. And the feasibility study, which we released in February of 2021, validated that the project is economically just incredible, with very high internal rates of return of 56% at a $50 uranium price, which is where we are at the moment, and a payback period of 11 months. And not only is it economically incredibly strong on any world scale for a resources project, it's also environmentally elite. That's a function of its very competent technical setting, but also the design parameters which we've incorporated into the feasibility study to make this mine one of the world's most environmentally elite managed mines globally. So very, very exciting. The team's incredibly dedicated to the objective of bringing this into production and setting a new standard with respect to the environmental management of a mine.
And Leigh, I also want to put this into perspective, just how large this asset is. Can you tell us what the average annual production will be in the first 5 years and also over the life of the mine?
Yeah, at the feasibility study showed 30 million pounds per year. When you consider production worldwide for 2022 is estimated to be about 135 million pounds. It's going to be around 25% of the world's production. That's huge, but it's actually physically going to be one of the smallest mines on the planet. It's a function of its very high grade. To give the audience an appreciation of just the actual scale of the project, we'll be mining basically the volume of a double-decker bus once a day. So it's actually a very tiny amount of rock that we're moving, yet it really does pack a punch in the pounds that it will produce. 30 million pounds on average over the first 5 years, and then 22 million pounds over the initial 11-year mine life. And I want to be very clear here. The feasibility study only incorporates the measured and indicated section of the resource. We have another 80 million pounds of inferred resource that with tighter space drilling will go into the measured and indicated category. And then we have a number of uranium intercepts that we've drilled but have yet to follow up and bring into the resource statement. And based on our current appreciation for the mineralization, both as defined in the resource statement but also drill intercepts, we are applying for a 24-year mine life. So whilst the feasibility study is only looking at one section of the resource statement, this will be a multi-decade project over the course of its life.
Leigh, as we mentioned at the onset, the big milestone for NexGen in 2022 is that the Canadian Nuclear Safety Commission approved the draft EIS. Can you just provide an overview of what this means exactly and what it means for NexGen?
Yeah, the EIS that we submitted is a combination of over 5 years of work, incorporating over 10 years of technical, environmental, and social data and analysis. And whilst it's termed a draft, it's actually the formal conclusion of that 5 years of work and incorporating over 10 years of data. And it's now at the stage of a public comment period, which will conclude in about 30 days. And on conclusion of that, the comments, if they're relevant and valid, we will address them, and then the term draft is removed and it is deemed final, which is just prior to a commission hearing. We've gone to a lot of work over that past 5 years, testing it from a technical, environmental, and also incorporating the community's aspects into the design of the project. And we enjoy very strong support from our local communities in the project area. And they've been across the EIS the whole way. And so that EIS does represent all stakeholders' engagement and consultation into that document, and huge milestone. And the company is very much looking forward to the conclusion of the public comment period so we can address any remaining issues that may arise. Who knows? There may not be, but we're very, very confident with its submission, and look forward to the next steps.
So just to clarify, if there are no comments during this 90-day period, then it goes before the commission?
We address anything that arises from this process, and we address them, and then the EIS becomes final once the regulatory bodies have completed their own consultation and engagement and review process. We've gone to a lot of effort prior to submitting the EIS to ensure that we have met all the requirements from a technical and environmental perspective and social perspective. And this is a very important part of the whole procedure, is this 90-day public comment to be a kind of a final flush out of any remaining issues, be it valid or not. We'll address them all respectfully, and looking forward to that. Then with the EIS becoming final, it concludes with a commission hearing, which again we are very much looking forward to participating in.
And can you give us any sense of, like, on a best case scenario, when would that hearing be and how long would it last for?
From start to finish, the government aims to work to a 2-year timeline. Is it going to be shorter, longer? It really is going to be a function of the work that we've done in the past and this public consultation period to address any remaining issues that may be present. But as I speak, I believe the likelihood of anything materially extending the timeline is very, very low. It's a very simple project, technically, environmentally incredibly elite, and it enjoys very strong support from the local communities and stakeholders. So we're confident with respect to these next steps, and rightly so, and look forward to going through these next important stages.
Leigh, we touched on the feasibility study, we touched on the EIS. Now I want to move on and touch on exploration, because this is also a very important aspect to the NexGen story. And currently you've only investigated or explored a very small part of the overall land package. And you've mentioned this before, that you're not looking to grow Arrow, you're looking to find another Arrow. So I want to spend a little more time on exploration. Can you just tell us right now what's going on with your exploration program? How many rigs do you have going? And maybe you can also touch on the targets.
Yeah, we've got 2 rigs going from an exploration perspective. We've got a 3rd rig doing some geotechnical work in preparation for the shaft sinking. But the 2 exploration rigs are, as you pointed out, Jimmy, are focused on discovering new arrows. And to take listeners back just to the beginning of the discovery back in on Valentine's Day 2014, we discovered Arrow with the very first drill hole on that target. There hadn't been a drill hole for 4.5 kilometer radius, and we hit it with the very first drill hole, and it's the world's best uranium deposit. So that particular corridor, which I mentioned, has a number of uranium intercepts on it that currently aren't in the resource statement. We've only really explored maybe 10% of it. And just off our property along that corridor is Fission's RRR deposit. So we know there's 2 significant areas of mineralization in Arrow and RRR that Fission own. And we have a number of occurrences in between and along strike from both of those. And yet we haven't followed them up. And there's areas that we haven't tested at all along that corridor, which look very, very interesting geophysically. Look, we understand exploration, and our track record speaks for itself. But in a interesting perspective, did we find the world's best deposit with the very first drill hole? Odds would suggest that very clearly there's more mineralization there, and for us to have discovered the best deposit first, very unlikely. When you then consider the rest of the Rook 1 package that we refer to as SW2, because we have 3 very vast land packages in the southwestern section of the basin. We're the most dominant land holder in that area, which hosts Arrow. But just on Rook 1 alone, I mentioned we've only explored 10% of that particular corridor that hosts Arrow. Well, we've got another 9 corridors on the Rook 1 property alone before we get to even the other 2 big packages. On Rook 1 alone, we could have 10 rigs for 10 years and still not complete the full geological evaluation of that property. So very much encourage Grant Greenwood, the VP of Exploration, who's been with the company since the very beginning, the very first drill hole, to be bold. And really for an exploration geologist, he could have no better orders than to be bold and throw that fishing line out there to catch a big one. So it's just really a function of time before we do, and the geological prospectivity speaks for itself.
And when can we expect some updates or results from the current drilling campaign?
Yeah, most likely at the end of the season. It's really nice to have in the background there this exploration going along. The priority is on the EIS and also the front end engineering design that we're in the final stages of concluding. We'll then immediately transition into final design, detailed design, and have the project fully engineered in about 12 months from now. So plenty of news coming on three fronts: the engineering, the permitting, and the exploration. And so it's a very exciting time at the company, just as the market is really starting to appreciate the power of nuclear energy and the delivery that it's very, very clean environmentally. And so everyone, all hands on deck at NexGen, and everyone feels very privileged to be working on such a important objective.
Leigh, I want to move on now and touch on your balance sheet and also financing. First of all, how much cash do you currently have?
About 100 million Canadian, and that fully funds us for all of our programs in 2020, for the remainder of 2022 and all of 2023. We are also working on the project financing, so we'll be US dollars, $1 billion capex. Travis and I are working on that in parallel to all the other important objectives around the project itself, and we'll be working on that during 2023. So in a really good position, well funded, strong support by shareholders, and very strong support by financial firms that are looking to invest in the capital construction of the project.
Leigh, you recently filed a shelf for $500 million. What was the reasoning behind this?
Yeah, that's really around the administration of actual financing. It just really does provide greater execution, simplicity when you do go to raise that money. And so that was the purpose of the base shelf prospectus. And so we're set up that when that time does come, that we'll be able to do it seamlessly as we have in the past.
And Leigh, we mentioned right at the onset that you were just in London at the World Nuclear Association. Do you have any more marketing events coming up as we head into Q4? Yeah,
we always throughout any calendar year, every month we're doing various forms of investor outreach. But I'll say this: we're receiving a lot of inbound calls, and I think the interesting part is a lot of them are coming from ESG environmental funds. Now that was never the case 5 years ago or before that. So I think that is really good evidence that the appreciation of nuclear energy has really filtered through and been recognized as a valuable source on an environmental ESG perspective. And the European Union validated that by incorporating nuclear into their finance taxonomy, officially recognizing nuclear energy as clean, green, and safe relative to any baseload form of power. And it's just pleasing to see. And so, yeah, far more busy when it comes to investor relations now, answering queries and also proactively telling the story. And but the investor universe is getting bigger and bigger as we speak. And you know, I'm just glad we've done all the work over the last 10 years to get the project into this situation and stage of development, just as the market's going to really kick in for us. So instead of heading into that headwind, it's really swinging around to be a tailwind.
And so you just touched on the fact that you're getting a lot more inbound calls from investors, and I'm just kind of curious, the nature of those investors. Are they from North America, Europe, Asia?
All over. Europe, North America, Asia, and some may be surprised at this, Australia as well. Like we're getting very high demand down there. We dual listed down there back in July of 2021. It's still illiquid because we haven't done a capital raising down there, and so there's some funds down there buying on the exchanges and transferring the shares down. But it's still very liquid relative to our primary exchanges of the TSX and the NYSE. But yeah, that personally very pleasing to see. You know, I'm from Australia, as you know. The accent doesn't hide that. It's very pleasing for me to see personally Australia's appreciation of nuclear energy, given its history, and so yeah, no shortage of investor interest down in Australia as well. It's very exciting.
Leigh, as we wrap up, you've already provided a lot of information on what investors can expect here over the next few months, but maybe you can just provide a summation for investors on what we can expect in terms of news flow here in the next few months.
Yeah, a lot of news flow. It'll cover permitting with the EIS, then engineering as well with the conclusion of FEED, moving into detailed engineering. We've got the exploration happening in the background as well. And then overlaid on top of all of that is we're coming into that time of year, post-summer, that traditionally the utilities and the trading in the uranium market starts to intensify as we head into the Northern Hemisphere winter. So I think one takeaway from the WNA is that prices are going higher, and they will be overlaid on top of all of those things I just mentioned in news-wise, and you know, NexGen trades very well amongst its peers. And so that, and taking into account where we are with the project and stage of development, incredibly exciting period coming up for everyone involved.
Well, Leigh, thank you for spending time with us today and providing an update on NexGen Energy, and we look forward to the EIS approval and also the upcoming drill results. Thank you.
Thank you, Jimmy. Absolute pleasure, and thank you for having me on your show.
Hi, I hope you're enjoying the conference. Did you know 80% of our viewers are not subscribers to our channel? So please subscribe to our channel and help us get to 5,000 subscribers. Enjoy the rest of the conference. Here, I'm looking forward to this discussion because you're involved in the buying and selling of uranium for your various clients. But before we dive into the mechanics of trading uranium, why don't we just start with a brief overview of WMC Energy and the services your firm offers?
Yeah, we're a commodity merchant based in Amsterdam, Holland. So in that meaning, essentially, we arrange for supply contracts, financing solutions, and risk management when it comes to commodities for a large range of customers. Obviously, we started in nuclear fuel only, but we're rapidly expanding in battery metals, and now we're also starting to take a look at rare earth metals as well. So it's So it's a very fascinating field. Anything basically relating to an energy transition to decarbonized economy, we plan to be there, and we got some great people on board now over the last few months. So it's a very exciting time.
And what about yourself? What exactly do you do at WMC?
I'm in the nuclear, as part of the nuclear fuels team. I obviously buy and sell a bit of uranium, buying quite a lot of uranium on Sprott for the last 18 months here. But I also cover some European customers, utilities and producers, and yeah, obviously the big ones as well, such as Kazatomprom and others. But I used to work for a Swedish and a Swiss utility, so I have a lot of contacts over there, and so I stay in touch with them fairly frequently. And I'll be heading over there later next week as well to spend some time over in Europe, and just to hear there's a lot of going on there, obviously, with energy security issues and the whole geopolitical situation going on there. So it's a very relevant time to be over and sit down with some of our clients over there.
I want to get a better sense of what you do on a day-to-day basis. Maybe you can take us through this. You just mentioned that you have a couple of utilities as clients. Do they phone you up and say, Pierre, I'm looking for 2 million pounds in the next 2 years, or how does the conversation begin?
Yeah, it's the nuclear fuel market is it's at a snail's pace, I would say. Even for our standards, it's very rapid moving right now, but it's a traditional transaction in the nuclear fuel market. It's months in the making. So it's if they need material, that's something you sort of on a bilateral basis, you discuss it over a few weeks. You come over and have a visit, sit down with them, or meet each other at some of the main conferences we have spread out throughout the year. And then you just listen to what they need and propose a few solutions that may help them. And then we kind of go lockstep with them and procuring material in the market. And then we can find a financing solution and then provide a sort of a delivery schedule out in time for them if a supply solution is what they're looking for. So it's not okay. You don't have a screen you click on. You don't have any of that electronic stuff going on. It's very much phone call, emails, messages, actually handshake at the actual meetings as well has happened. So it's a slower moving market, but it's also very much based on relationships. And I think that's one of the aspects I really like about the industry, that it is very personal, and it's you have long-standing relationships. Some of these European utilities I've been working with for close to 2 decades now. So it's we know each other, we know a lot about each other, and we also really enjoy each other's company.
And when you deal with a European utility, for example, I'm curious how the terms have changed here, maybe just in the past year. And like, are the sizes or the number of pounds that they need, has that increased? Have the terms gotten longer? Have they gone from 2 years to 5 years, for example?
Yeah, that's definitely something that changes depending on where you are in a contracting cycle in general. And one large change as well is that a lot of the European utilities, mainly Eastern Central Europe, but even Finland, they have Russian-made reactors, and they've traditionally had life of plant supply of fuel. Now they want to move away from that for obvious reasons. So here you have an entire new customers that have been locked up with Russian supply that are now looking to diversify, and they haven't necessarily had any experience in fuel procurement before, because I mean, you can say what you want about the Russians in general and the Russian foreign policy, which is obviously despicable, but the people involved in the fuel chain in Russia are very good. Their relationship with their existing clients have been good. They've been very reliable as a supplier. So there really hasn't been much work that these European utilities have had to do. And now they're put in a situation where they need to find alternatives and find them fast. So we are definitely spending some time with those folks and helping them as much as we can on the way, and making that transition as smooth as possible. So it's really a story of where the Western fuel industry is coming together to make sure that there is definitely no power stations going to be left without fuel. So it's great to see everybody working together on this.
And when you deal with a European utility, how many years of inventory would they typically have?
Europeans might have a little bit more traditionally than North America, but say up to 2 at the most. And when you're looking at an inventory, that's not necessarily meaning that they have the fuel bundle sitting right next to them and just ready to go straight into the reactor. It could be that it's in the shape of enriched uranium product at a fabricator site. It can be UF6 hexafluoride at an enricher, or even U308 at a converter. And obviously, the further back in that chain you are, the longer it's going to take to actually get the fuel fabricated and ready to get into the reactor. So when they say that they might have 2 years worth of inventory, now there's quite a few steps you need to take for some of that inventory before you can load into the reactor. But a lot of European utilities, I would say, they might have up to a reload on site when they can they can shut down on short notice. Something happens to their fuel chain or supply chain of the fuel elements, they can still operate for another 12 months, which is obviously a very unique situation to be in when if you compare to a gas power station. If Putin decides to shut off the gas, well, you might have a day or two stored on site of gas if you're lucky enough to have any at all. Otherwise, you're going to shut down right away. Whereas a nuclear power station, they'll be able to certainly stay on over the winter and potentially even over the next winter as well. So that's been a very large factor, I think, in the let's call it the environment, the atmosphere that or the environment that the nuclear operators are in, when they have much more of a political support now than they did just a few years ago. So it's a good reason for all these life extensions, all these projects of plants staying online in Europe, a very big factor on that.
So generally speaking, European utilities might have 2 years worth of inventory and North Americans would have 1?
1 is very, very short. I mean, 1 is essentially no time at all when it comes to nuclear power stations. So I would say North Americans maybe between 1 and 2, and certainly not a lot of fuel elements on site. But I think across the board, if you look at it, it's like Asians might even have more than that. But across the board, almost every utility has been reducing their inventory just because they might have accelerated. There's been extreme, obviously, price increases, and they just want to work down their inventories a little bit, hoping that things are going to pass. Now it looks like it's going to drag out a little bit. So this is when utilities actually starting to look at, okay, maybe we actually need to increase our strategic inventories, which is going to cause an uptick in contracting even above the normal contracting that you would see on a normal year. So that's starting to shift, and we've kind of seen that over the summer and certainly now starting in the fall as well.
And when it comes to pricing, are the prices that they enter into with these contracts, is it based on the spot market? Is it based on some sort of fixed price, or is it a combination of the two?
It's very common to have a combination of the two. Now, of course, if you're a fuel buyer and you have a portfolio in front of you, now you can have some contracts are just the market related index based to spot prices, and one is only fixed prices. So overall, you have a balanced portfolio. But if you look at a company like Cameco, while they could have, in the extreme cases, one or the other, most of their contracts, I would think, in a way, it certainly was that way when I was back there, that you have kind of a hybrid contract with most of your clients. So you kind of overall do have a bit of a balance between the two. Now that can differ from one utility to the next, but I'd say overall, on an average basis, I would say there's a balance there.
You were recently at the World Nuclear Association conference in London, and you have been at this conference many times before. I'm just curious, given that it hasn't been going on for 3 years, I'm curious to hear what you thought of this one and how was it different from past conferences?
Yeah, the difference is, first of all, there was one compared to the last 3 years, so that was the main difference. And then even seeing people there, I mean, the atmosphere was so, of course, you have the overhang of the security situation in Europe, but overall, the atmosphere is so positive. We've never seen this support, this global support, media interest, and just good atmosphere in general for nuclear energy, with decommissioned power stations possibly being brought online again, life extensions, SMRs, new builds everywhere. It really is it's a really, really good time for the industry, and it almost feels like finally people are getting it. We don't have to explain or have to defend ourselves all the time. Now it's more like, how fast can you come online? So that's a very big difference. And I was kind of joking when I was talking to some other folks a couple of days ago that when you haven't seen someone for 3 years, I wonder how they changed and might look older. Across the board, I would almost say people look younger because they're so much happier now. They really feel like finally this is our time and we want to deliver. So everybody's up to the challenge and ready to roll up our sleeves and just sort of produce as much low carbon electricity as humanly possible. So it was a very, very upbeat, good atmosphere.
Many of our presenters today were also at the conference, but in a totally different capacity than you. And just given the nature of your business, your conversations with utilities would be very unique. And I'm just kind of curious, I know you can't go into details, but if there was one concern that you kept hearing from utilities, what would it be?
Yeah, I think main concern there, and we can have very open discussions with them considering we're not sort of a pure just a supplier and that's it. So we can have a little bit more of an open conversation with each other and certainly give advice where possible. And I would say it is really focused on enrichment and conversion at this time. Certainly conversion. I mean, enrichment, you can, as you might well aware, enrichers can create more enrichment by overfeeding. But the bottleneck in this chain, there is a risk that there will be a shortage of conversion. So that is certainly a concern for utilities. And if you're looking at, I'm going to make my supply chain as solid as possible and my supply portfolio contracts, you got to look at conversion right now. So that clearly is a main focus for them.
And do you think there's a sense of urgency or maybe a sense of panic when you speak to them?
Panic is a strong word, and it's that there definitely no one is panicking. Like you have like I mentioned, the ones with the Russian design reactors that now have to go and completely procure with new vendors. They're not panicking. They're just very focused on what they're doing, and they can still have deliveries come from Russia. It may happen in some cases. So that can alleviate some of the pain, but it's clearly it is a source of concern. But very few, I would say, if anyone in this industry panics. It's panicking in the nuclear industry probably means that someone is just not stopping for a coffee break and working a little bit more focused. So it's just really eyes on the prize, eyes on the ball, and make sure that those fuel elements get there in time. But you still have a couple of years to get that. But it certainly is. It's a different kind of focus there for sure.
And are U.S. utilities still acquiring Russian enrichment and conversion?
To my knowledge, yes, they are. Obviously, there was a shipment with enriched uranium product from St. Petersburg. There was a Canadian vessel, I believe, that was held up for a few days, and I'm sure there was a couple of fuel buyers here in the U.S. who choked on their coffee for a few days there, but it was solved. But the U.S. utilities that have Russia supply contracts, they are taking deliveries, to my knowledge, yes.
And do you see a new contracting cycle starting soon, or do you think it's already started?
I would say, I mean, the contracting cycle is more or less continuous, I think. Now, there might be that, as I referred to, that push to expand your strategic inventory, so that may speed up or at least beef up the tenders that you do see. And as far as enrichment and conversion goes, we have definitely seen that. And I am quite certain that there are bilateral discussions going on with the large uranium suppliers like Cameco or Kazatomprom. Saw Grant Isaac commented in an article in Financial Times that they'll have on track to have their busiest contracting year since Fukushima. And I believe that would make absolute perfect sense. You're just not going to see it until the contracts are signed in Cameco's numbers. But these things can take months to negotiate until you actually get it inked on paper. So I'm sure the marketing team at Cameco is very, very busy.
So I'm glad you brought that up. When it comes to long-term contracting on the year, I believe we're around 78 or 80 million pounds. Where do you see us finishing up come year end? Are we going to hit 100 million pounds?
I think it's very possible, absolutely. As I referred to, like there are discussions going on right now that may not be agreed to until next year, so it can certainly spill over to next year. But I I would still expect it to get to 100 million pounds. And I think it'll be off to a flying start next year, though, when some of these negotiations will come across the finishing line too. So it's definitely going to be, if you look at a moving average, you're going to see over the next few years, there'll definitely be an increase, sort of a step up in those levels.
There's many people out there suggesting that US utilities and also European utilities will be caught off guard with what's happening in the spot market and also the long-term market, and that there might be a short squeeze here in the coming months. Do you believe this is the case? Do you think, like, the utilities, do they know what they're doing when it comes to buying fuel?
Yeah, I mean, absolutely. I think, I mean, I follow Twitter too, so I see these voices, and it's mostly entertaining. Some of the people really know what they're talking about. Absolutely, there's some very knowledgeable people there. There's clearly also a very large contingency of people that are just speaking their book, whether they're long or short. And so I do it mostly for entertainment. But I've seen those comments too, and having worked with fuel buyers for up to 2 decades, yeah, I wouldn't hold my breath for a short squeeze based on that. They are very good at what they're doing, these fuel buyers, and like I said, no one's panicking here. You might step up your contracting a little bit and come out for more tenders, but the uranium that you're contracting for now, you actually don't need, 2, 3, 4 years out in time. So no one's really getting squeezed. And also I had a conversation with some of my former colleagues, and I also know, because I worked at a utility and know what the production costs are, and I also know what the electricity prices are in Europe right now. And I mean, if you have a doubling in electricity price, and believe me, there's a lot more than a doubling going on over there right now, the fuel cost of a nuclear power station in your operating cost, the fuel portion of that is 10%, maybe a little bit more, and the uranium is going to be, say, 5%. So if you have a doubling in electricity price, well, you can do the math. Uranium can be a lot more than $100 a pound, and you'll still be buying it, and you'll do just fine. So they're not going to panic anytime soon. They're going to make sure that they have the fuel, and I have no doubt that they'll make sure that they do have it. And I think that's the reason why they're focusing on conversion, because that actually can run out. Now I think there are inventories and things that you can't find it. It's just going to get more expensive than what it is today. But U3O8 you can more or less always find. Now it might be at 70, 80, 90, say even $100 or more, but you'll still buy it, and you're not going to shut down your power station because uranium is too expensive. That I am very confident in.
You mentioned earlier that utilities are still focused on the back end of the fuel cycle. When are we going to see a shift to uranium?
Yeah, thanks for bringing that up, because I think it was my fault for using the term as well. Now, normally when we talked about the fuel, the back end means actually after it's been in the reactors. That's when you stick it in a canister or a fuel pool and it's very radioactive. But what is the front end of the fuel cycle? That's where you have the mining, conversion, enrichment, fuel fabrication, and then you put it in the reactor. So what I refer to is the back of the front of the fuel cycle, which means fuel fabrication and enrichment, and maybe even conversion. So that's where a lot of the focus is right now, and we are going to see a transition from that into, once you have contracted for those components, you move on to U3O8, and it's starting to happen. Certainly has started to happen, and it's only going to accelerate. That's my view over the next 6 to 12 months for sure.
Given how you spend a lot of time on the spot market, maybe we should just touch on that. Over the last few months, it's been relatively quiet. It's been hanging around the high 40s, low 50s. What's your sense? Is there not a lot of product out there for sale?
I know for a fact that there's not a lot of products for sale, because I tried, and it actually was pretty hard even to buy a few 100,000 pounds from time to time. So I mean, if you compare it to 12 months ago, we were very busy with Sprott at that point, just buying hundreds of thousands of pounds every day, and it wasn't a problem to find 1 million pounds in a couple of days. Easy, more or less. If you were to do that today, first of all, I don't think I could find 1 million pounds in one day, and even if I tried and succeeded, you would see easily a $5 bump up in price. So it's a very different environment today than it is yesterday, or last year. So it's we're definitely set up for an interesting fall. Utilities are buying in the spot market if the prices become low enough. We saw it when it dipped in below 50 here a few days ago. Utilities are in there buying, and suppliers are too. I mean, you're going to see a Cameco or a Kazatomprom if they look, oh, this is cheap, we might as well buy instead of and let's beef up our inventory a little bit and sell it at some later point. So that will certainly have an impact. And then the big uncertainty as well is, at some point, is the nuclear fuel equity side of things going to decouple from the overall just bearish sentiment? And obviously markets are just down day after day with fears of inflation and everything else. Now, if there was to be a push into a spot, for example, or any other fund that holds physical uranium, that could have a very big impact on price. And it's like, I just know, if I don't expect it to be as busy as it was last fall, but if it was, uranium is going to move a lot. It's going to move very far, and it's going to move very fast. So it's a very different situation than it was a year ago.
Pierre, as we wrap up, you've been involved in the nuclear energy business for many decades now. Have you ever seen a time when it's been this positive, this bullish?
I know I was asked a question about a year ago, I think, on an interview, and I said, like, it's never been that positive. It's just going, the amount of news you got even back then on a weekly basis, what happened every few months before, and now I would say it's twice as positive as it was at least last year. It's really building momentum, and the fundamentals are there this time around. You have it's not just targets that people are talking about in countries and legislations. It's actually net zero legislation coming in there, and it's just I don't see it stopping. And you're talking about large scale deployment of SMRs, for example. I always thought that's 20 years out in time. Now I'm starting to think that's probably only 10 years out in time. And if it's only 10 years out in time, that means it's going to affect the uranium market 5-6 years from now, and people need to start planning for that. So it is changing, and it's changing fast. And one of the best news, I think, it's and that might be because of the Inflation Reduction Act that was passed here in the U.S. But you have first of all, the reactor in California that are going to stay on now for some time, 5-10 years. But you have the Palisades reactor in Michigan that was already handed over from the operator to the company that was actually going to decommission it. And the company that was going to decommission it, they are actually filing an operating license. So they're going to fire it back up. So the funds that they took over to decommission the plant, they're going to use to keep it running now. And then obviously they'll make sure they can replenish the decommissioning fund, and they will do that and then some. But it's such a good story, and you see an immediate impact that some of this political environment is having, and it really is. Yeah, the fundamental support for nuclear energy is there, and it's not just for the industry anymore. Now it's like you obviously have investors chiming in, you have media, and you have policymakers. So it's I think it feels like it's for real this time. So it's been around for 20 years, but it really feels positive.
So in spite of all the turmoil we're seeing in global markets in the month of September, and also I guess in the last few months, but you're still very positive, and I guess your message to investors would be patient.
That's all I can do. Like, as far as the fundamentals go, it's never been better, and obviously it's like it's never fun to look at your phone and just see red everywhere, but I'm afraid that is everywhere right now these days. So it's more just where you're going to put it, and then if you really take a step back and look overall S&P 500 versus some of the nuclear fuel equities over the last few months, I think it looks as good as you can get. It certainly looks stronger anyway. So it's I'm patient. I'm a patient person. I work in the industry, so, and obviously I'm very closely tied into the nuclear fuel market. But it's even if you weren't, then please educate yourself, read up where you can, and listen to conferences such as this. I think it's a great forum to get the word out, and I think you're doing a great job, Jimmy. But it's educate yourself, and yeah, I would encourage you to be patient anyway.
Well, Pierre, I want to thank you very much for spending time with us today. Those were great insights, and I do appreciate it. Thank you.
Thanks, Jimmy. Happy to help anytime.
Hi, Askar. Thank you very much for joining us today. How are things in Nur Sultan?
Hi, James. Long time no see. Things in Nur Sultan are very good, except a little bit of weather. It's getting cold, and as we go to October, I think the winter would be coming.
So, Askar, as you know, I'm in Toronto, and in downtown Toronto, if I were to guess, I would say maybe 40 to 50% of the people are back to work. So a lot of people are still working from home. A lot of people are on a hybrid model. They might come to the office 2 or 3 days a week, work from home the balance of the week. What is happening in Nur Sultan?
Well, I think we had a little bit of spike of COVID maybe a couple of months ago with 50 to 50, similar like it is in Toronto. But now with the COVID situation getting much better, I mean, the companies has no restriction to return the full capacities back to work. So generally, at least 70% of the people return back from home to their office, with some of the staff who are willing to stay on a distant work, they still stay there. So, but otherwise, we have no restriction of returning back to the office.
Interesting. It's interesting to see how different countries and different regions in the world are adapting to these changes. So, Askar, I want to move on now. You attended and spoke at the World Nuclear Association recently in London. It was the first live event since 2019. And I want to ask you, how was the mood and what was the overall consensus? Are people very bullish about the nuclear sector?
Well, I think everyone enjoyed the WNA face-to-face conference. The first one in 3 years. It was an amazing event. It had a lot of attendance. It has a lot of people joining, all the different kind of attendances, not only from the nuclear industry, but also we had seen a lot of journalists. We had seen a lot of financials. So we had seen the financials coming before the COVID, but kind of today's attendance of financial institutes and people from banks and investors are actually increasing. So with that, I would say that, well, all the thoughts or all the attention is at the moment with the events on Ukraine. So for WNA and for kind of other agencies, it's hard to focus on some things that, well, very closely related to nuclear industry. But however, as we saw the discussions and all the talks and panels, there is a very positive momentum on the kind of nuclear energy development in general. So as a lot was discussed there, even at the panel where I was participating together with actually 2 government officials, Yurenko, and the discussion was like, you know, all these excess supply, all these excess inventories are actually gone up, and we don't have that inventory that kind of that was on the market for the time since Fukushima. So that inventory is gone, and now it's actually a very challenging spot market. It's very challenging kind of near-term market. There's a lot of uncertainty there, and as we are discussing, kind of spot market cannot be very reliable for a long time as a long-term source of supply. And actually, that near-term and spot market is drawing more and more attention from financial players who are actually competing with utilities or any other market participants for the material on that market, and they would like to buy it and hold it. So, and that's the current tendency that we're seeing there. So for the nuclear industry, generally the sentiment is moving towards a long-term security of supply, and more discussions are over that part. So what we were having as a discussions is actually much more long-term view and long-term discussions.
And Askar, you spoke with many different individuals at the conference, both investors and utility buyers. With regard to Kazatomprom, what was the most common concern you heard from these people?
People, it was mostly customers, but also we had a lot of meetings with investors as well. So they have a little bit different view on the on the nuclear industry. So with utilities more knowledgeable, knowing kind of day-to-day marketing, day-to-day business, they were focused, as I said, for the long-term views, what kind of security of supply we have, how well we are developed. With actually investors kind of using different sources of the information. Some of them are a little bit questionable, with a lot of kind of things that were not, in a sense, speculative. I would say kind of getting the information from different sources and creating some sort of the information which was not confirmed. So, but generally, both parties were very much interested in the ways of transportation, which they think is a main challenge at the moment. We discussed and addressed their concerns, both for utilities and investors. Some of the discussions were about kind of the political situation in Kazakhstan, as long as we are the national company. So that's kind of the main things that we were discussing with all the stakeholders whom we met.
Askar, as you mentioned, transportation keeps coming up, so I want to touch on this, and I want to touch on the progress you're making with the Trans-Caspian route. But before we do that, I first want to touch on St. Petersburg. You're still using St. Petersburg. This is your primary port that you ship all your uranium to. Has there been any issues? Has it been interrupted at all?
Well, great question, James. First of all, with all the speculation on the market, I mean, I would like to say that with no direct sanctions on Rosatom and on the uranium generally towards Russia, the Russian route is still open. It was always open and functioning, and it is functioning at the moment. So we had no disruptions in transportation via kind of Russia. First of all, we always keep the title of the product. We never lose it. So Kazatomprom is the owner of the product, and it never transfers it on the way to Western converter. The only point of title transfer is actually at the time of book transfer on the conversion facility. So before that, we completely own, pay, insure the cargo. So cargo stays with Kazatomprom, and kind of throughout the whole transportation way, we just hire the companies and do the transportation. So with that, I mean, the Russia is just one of the part of, or kind of one of the transit passes or ways where we deliver our product. So we used it. I think the last delivery was like in July. We've made the last delivery by Russian route. At the same time, I mean, there are a lot of issues about insurance and other parts, but with insurance, you know, it's still working. We can insure even at the Russian territory as long as we keep the title of our product. So there is no issue. But we, the only thing that changed for the insurance is we are insuring each delivery separately. So that's the only difference. So it hasn't actually created us a lot of difficulties. So that's operating. We still keep that route as operating route. At the same time, we have alternative route. But again, the alternative route, which is Trans-Caspian route, was not created this year. We've been preparing this route starting from 2018, when we first struggled or a little bit struggled with transportation through Russia when there was a World Cup. The St. Petersburg was closed, so we had to see any other options. Actually, we found out that there was already existing Trans-Caspian route for general cargos. It was already operating. It had a big turnover of the goods, general goods. So we just adopted that route for kind of transportation of uranium. So that's the only thing we did. We explained that this is natural uranium. It could be used. There is even though it is class 7 cargo, but it could be treated as a general cargo and could be transported with a general cargo as it is done all over the world. It has a little bit more kind of attention based on the security issues, but generally, I mean, it's all the same means of transportation. So we just extended that availability of that route for uranium starting from 2018. And since that, we kept this route open and operating just to keep that memory of all the transit countries there, that we would be moving this material. And as we are seeing today with the current geopolitics, actually it paid out that we were developing and kind of creating an additional challenge for ourselves back in 2018, that now we could be using this route kind of in a full capacity.
And so just to clarify with St. Petersburg, you're still shipping product through there. There's been no interruption in terms of services, and Western clients are still receiving their uranium.
Absolutely, yes, James, that's true. And I mean, Canada and European Union had granted so-called waivers for transportation via St. Petersburg of nuclear materials. So I mean, there is no restrictions at the moment to transport via St. Petersburg.
So let's just touch on the Trans-Caspian route. Give us an update here. When can we expect to actually see a delivery of product?
Well, as we were participating at WNA, the first batch of containers were actually heading to the port Poti in Georgia at the Black Sea. So just at the kind of the gala dinner that was hosted by Kazatomprom, we have shared the photos of the first batch actually reaching the port of the Poti, and now it is staying there and waiting for the second batch to join, and kind of then the vessel will come to pick up the joint bigger batch. So I mean, it's operating. The cargo is already there. We are waiting for the second part of the cargo to arrive, and then we will make a sea transportation to the final point. And actually then we would definitely share more information with all the stakeholders who are interested in knowing the success of that delivery. And by the end of the year, we're planning actually to do one more delivery via Trans-Caspian route. So we would be sharing as much information as possible.
And with the Trans-Caspian route, are there any issues in terms of quotas, or is there any timing issues? Will it take longer, for example, than when you go through St. Petersburg?
Well, you know, yes, there is a certain quota which we applied in the beginning of the year, which was kind of the quota that we were expecting to use, and that quota was more than enough for Kazatomprom. At the same time, we had been asked by our partner Cameco to share that quota, or to help them to use Trans-Caspian route for the deliveries of their share from Inkai production. So in that sense, we have to increase that quota and do some paperwork to ensure that they could also be fit within that quota, and they could they could be using this route as well. So as I said, our cargo is already delivered to port, so we would be helping Cameco to make that part, make kind of their share of delivery within this year as well. It takes a little bit of time. It's more complicated, and the countries are just getting used to or knowledgeable to what it takes to move uranium. So our initial route was operating for more than 20 years. So there was established procedure which was easy to do. Here it's a little bit more bureaucratic, but generally, I mean, we just have to do all the paperwork and be very patient to get the quota. So initial quota we already have for Kazatomprom. We are trying to enlarge it or increase it for bringing in Cameco's share. Other than that, I mean, if we talk about the timing, so we've compared the time of delivery by Trans-Caspian route to France and via St. Petersburg to France. I mean, via Trans-Caspian route, it was a little bit less time consuming. So I guess 1 week of saving if we deliver via Trans-Caspian route, if we compare to France. We've never actually compared it with the deliveries to Canada, but I guess maybe it's almost the same time.
And Askar, once this Trans-Caspian route is fully operational, will you be using it more frequently?
Well, it will depend on geopolitics and on the requests from the customers. If there will be a separate request to transport from that Trans-Caspian route, we'll see that. But if we are to move the full capacity from kind of St. Petersburg route to Trans-Caspian route, it's not a big deal in terms of containers. As you know, the number of containers is not that huge to make a huge impact on the capacity. So even if we divert the full capacity of ourselves and some of our JVs, I mean, it will be from 1,000 to 1,200 containers per year. So it's like, the amount of big container ships. So it will not kind of make a big headache for those who will be doing the transportation for ourselves. So we have been discussing with the authorities on Azerbaijan and Georgia for increasing the quantities, and they have no issues to increase it up to the full capacity. But again, as long as there is no impact on Russian route, as long as the customers are not putting any restrictions there, we would like to have as many possible options for delivery as possible, and we'll be using them equally, I guess. So, I mean, I'm not sure what would be the plans for 2023, but we will see how our customers will be treating that issue. And at the same time, I mean, not limiting ourselves with just these two routes. We're already in a discussion with other possible ways. I mean, we're in discussion with China to get the possibility to make a transit through China. At the same time, I mean, our industry had always the possibility to do these location swaps. So this is also available for ourselves, and we could have a delivery to China and getting the similar quantities at Western Converter without any issues. And as we said at the WNA, I mean, we would be considering even to move the cargo by air if that's the situation at the moment. We had that experience once back in 5-year time. So if that's required, I mean, we could consider to do it again. And the current price is actually very favorable. So I think even the higher price on the air cargo transportation could be met with the increasing price of uranium.
Interesting. So that was a great discussion on transportation and logistics. Let's move on now. I want to pick your brain a little bit about contracting. The summer is typically a quiet time for uranium contracting, but after the WNA and as we head into the end of the year, do you expect this to change? Do you expect to see a pickup in contracting? Do you think people are going to try to close up or complete their contracts that they've been negotiating over the last few months?
Well, interesting question. You know, indeed, the summertime, I think, were a little bit easy time with a lot of Western utilities went on holidays. From June to August, it was very quiet. However, I mean, some part of the Asian markets and other markets were still in a discussion. So we had been in a discussion or had some kind of the pipeline of discussions with different type of utilities from all parts of the world, kind of starting from the beginning of the year. So definitely after WNA, there is a huge expectation that we will see more and more tenders, more and more discussions to start. And actually, we have seen some RFPs and tenders being already launched during WNA. So I'm not very sure that they will be concluded by the end of this year. You know, the focus of the utility is more long-term. So they have already contracted 3 or 5 years in advance. So they would be steadily discussing with primary producers mainly the issues of long-term security of supply. So I don't think that they will be too much in a hurry to conclude it by the end of the year. But definitely all these discussions are very interesting and fruitful. And we are the part of these discussions. So I mean, we would be happy to conclude them by the end of the year. But again, as long as this is a commercial deal, I'm not very sure that we will be able to disclose it, even if we complete some of the contracts by the end of the year. But I mean, we are having some good discussions with the utilities at the moment.
And you mentioned there are some RFPs circulating. What would be the size of like how many pounds would they be looking for, and what would be the terms associated with these RFPs?
Well, I'm not sure that I will be able to disclose the volumes, but I would say it's much bigger volumes, at least twice bigger than it was 3 years ago. And in terms of kind of period of contractation, I mean, it's at least 10 years of those tenders that we're seeing. So if 3 or 4 years ago, it was up to 5 years, now it's starting from 5 and usually kind of 10 or 12-year contract that would like to be secured by utilities.
The spot and term markets have been relatively quiet in the last few months, with the utilities focusing more on conversion and enrichment. Do you think this is going to continue going into year end, or do you see utilities gaining more interest in acquiring uranium in the near future?
Well, you know, with the geopolitical and energy security issues are being in the focus at the moment, the best thing I think is to refer to, again, we were on a panel with Laurent Audet from Urenco. He was talking about that kind of contracting at the part of enrichment, and he said there is not yet enough discussions with utilities for the enrichment, as he pointed for these 3 camps of believers in the middle and non-believers. So he would like to have more believers to be joining those discussions for him to say that kind of enrichment part is picking up. So again, we're seeing that there are discussions. As long as they will complete the enrichment part, they will go for conversion, and then actually it all comes to the feed of natural uranium. At the moment, I guess it's still within enrichment discussions. As soon as they can secure the enrichment capacities and conversion capacities, we will start seeing those discussions. At the moment, we've had a couple of preliminary discussions with utilities, but they are kind of preliminary, so we are just patiently waiting for them to complete their securities with enrichment and conversion, and then actually being preparing ourselves for a discussion over the supply of natural uranium.
So I want to move the discussion now toward the supply chain and also inflation. During your last update in August, you mentioned production was hindered by supply chain issues. Is this still the case? And if so, is it still hampering production?
Well, we had guided that we had a little bit of constraints on production side in the first half, but our production team, our procurement team did a very good job. They've managed to secure all the necessary chemicals, sulfur gas that we needed. So I think now we'll be catching up that lack of production. So at the moment, we are not seeing difficulties that we might be kind of hitting the targets that we set. So we would be just with an updated guidelines that we gave in the middle of the year. So that's the current expectation of Kazatomprom.
Askar, as we already discussed, you and your team were in London for the WNA. What other marketing trips do you and your team have planned in the coming months?
Oh, I think the schedule is quite busy, except if we remove all the customer visits, we are planning to participate in NEI conference in the middle of October that will take place in Las Vegas. Apart from that, I think we would be participating in few investor conferences. One would be in Prague, that's Wood's conference, and I think in TD Securities, but it will be virtual, also in October. So that's, I think, the main events. Except from that, there will be a WNTI semi-annual meeting in the end of the year. So that's concerning transportation, and as long as transportation is being kind of in a focus at the moment, I think we'll be participating in that event as well.
Las Vegas will be a good place to go for a conference. I might have to join you with that one.
Yeah, that would be great.
Askar, as we wrap up, what news flow can shareholders and investors expect from Kazatomprom in the coming weeks and months?
Well, as we said, we would be focusing on being as transparent as possible and delivering as much information as we can in terms of transportation and showing our capabilities to make those transportation. Apart from that, I mean, we would be as close as possible to all the nuclear industry, and planning to participate everywhere we can participate. So we'll see what kind of the end of the year will bring, but I hope that kind of Curyer will have several good moments to make a kind of good announcement or share some good news.
Well, that was a great overview of Kazatomprom and your operations, and I want to thank you for spending time with us today, Askar.
Thank you, James. It was likewise.
I look forward to our next discussion, maybe in Las Vegas.
Absolutely. Sure, absolutely. Thank you.
Thank you. Well, that concludes our conference, and I want to thank all of our participants and especially our corporate sponsor, Sprott Inc. We have some amazing conferences coming up here in the coming weeks, including a precious metals conference and also a battery metals conference. So be sure to subscribe to our channel, Bloor Street Capital, and also hit that notification button so you can be kept up to date on future events. Once again, thank you for your support.